Good morning, everyone, and welcome to another Free Friday in the Trader's Crib. My name is Randy, for those of you who may be new, and I'm the host of the Trader's Crib, the primary host of the Trader's Crib. There's a few others, but this morning I will be going over a short little mini course to kind of get you guys familiar with Fibonacci. And what is Fibonacci? You're like, you've never heard of it before. You're like, Fibba what? And that's why I named it Fibba what? Fibonacci. And how to use the Fibonacci retracement tool when it comes to our trading. So I want to get into that course today. And let's get into it so we can get into trading. And I can show y'all what setups I have as well. All right. What we're going to be covering today is what is overall Fibonacci, the golden ratio, how to draw the Fibonacci retracement tool on the chart, and how I use the Fibonacci to enter and exit my trades, okay? And then you can use that information how you see fit for your trades. Let's start with what is Fibonacci. Fibonacci is a sequence of numbers. It is beyond trading. It is universal. It is like the stars in the sky and the sun in the middle. All right. Like it exists because like I have no answer, right? All right. And the sequence is 0, 1, 1 to 2, 2 to 3, 2 to 3, 3 to 5, 5 to 8. And it's because as you add the previous number to your sum, you get the sum and you keep going, and that's how you have the sequence. So 0 plus 1 is 1, 1 plus 1 is 2, right? 1 plus 2 is 3, 2 plus 3 is 5, and it just keeps going indefinitely. All right. So that's what the overall Fibonacci sequence is. It was noted and discovered by a medieval Italian mathematician, Leonardo Pisano, and it is responsible for the perfect spiral swirl that we see in nature, the nautilus shell, or how defined the sunflower is, right? That he discovered it. His name is not Fibonacci, all right? Leonardo Pisano. And that's a little picture of him right here, okay? So Fibonacci in trading. So how can we use this in nature? Well, because trading, since trading has to do with the people, and the people are part of the planet, and we're all part of this connected universe, Fibonacci applies. And many technical traders can use the Fibonacci retracement tool to conduct market analysis and things like that. So some advantages of using the Fibonacci: you can use it to predict future price movements. You can use it to determine current and future support and resistance levels. You can use to set profit target and stop losses, and to place your buy and sell orders for stocks, okay? And we're gonna kind of cover all of that in some trading today. I don't have Fibonacci on my chart right now. I use it per circumstance of the chart, okay? And right now I don't need it. This enough said, but it is a tool that I do need when the stock market is really choppy. I tend to throw up a Fibonacci to kind of help me play some short-term levels and scalp some small money during choppy weeks, or to help me play verticals, right? You can use it. You can find ways to use it, okay? So what is the golden ratio in the Fibonacci sequence? Like I said before, it's huge in the world of science, art, and music. And so that is why we have the golden ratio. And what is it? It is a fundamental mathematical structure which appears prevalent throughout nature, especially in the botanical and zoological kingdoms. When a number in the Fibonacci sequence is divided by the number preceding it, the quotients, which means the answers of a divided math problem, okay, for people who have not heard the word quotients in a while. But it's the quotients themselves becomes a series that follows a fascinating pattern. So not only do you have the Fibonacci sequence itself, you have this golden ratio that is created from the sequence, from dividing the numbers, and then you get what is going to appear on our chart as our Fibonacci levels. So here, as you can see, and I have my pointer on the screen, that 1 divided by 1 is 1, 2 divided by 1 is 2, 3 divided by 2 is 1.5, 5 divided by 3 is 1.666, and it continues on from there. All right, I'm excited for you as well to be here, Janita, and learn about Fib. I just now saw your chat, so I want to acknowledge you for that. Thank you for being here. So the golden section number is represented by the Greek symbol phi, and it is 1.618. And this is the formula. Does it matter? No. But for the math nerds who may be curious and want to know, here it is. I'm all supportive of the Geek Squad because I am myself a research geek number nerd. So I'll put it out there for all my other fellow geeks out there that want to just math out on some math. I'm all for it. All right. Geek has nothing to do with how you look, just all about your brain power and how you like to just find your passion on something. That's all that means in here in the Trader's Crib. No shade. So here is how the formula is written if you want to get all fanciful with it, with your symbols, right? You have the 1, you have your, divided by 5, square root, and the All right, you got it. Okay. So, there's a formula there. These slides are also available for you guys on the website, so you don't have to like screenshot or do any of that. You can just download the slides from the mini course section of the website. All right, next up, how to draw it on the chart, how to use a Fibonacci tool and draw it on the chart. All right, so the first step you're going to do, I actually need to edit this. When I went back over it this morning, I was like, actually, your first step is to identify where the Fibonacci retracement tool is on your platform, because that's step 1, because nothing else matters if you don't know where to find the retracement tool on your platform, right? So today I will show you how to find it in TradingView, but for those of you who are not on TradingView, you will have to kind of do a little Google search to get like a quick video of where it is. If it is not like easily found within your drawings, it should be within your drawings somewhere. Yeah, we have to find the tool first. Exactly. And so on Thinkorswim, it should be within your drawing tool somewhere in different technical analysis to find the Fibonacci retracement tool. I do know all platforms have it because that's just how common it is. It's just where to find it and what the little symbols look like and all that jazz. All right. So that's really step 1. So step 1A is to then start on the daily time frame. So you're going to, and this is actually, again, if you're swinging, you will start on a daily time frame. If you're day trading, I recommend the 2-hour. All right, so you want to add that note. For those of you who have printed off my slides before you came to class, what I recommend, you can add that note. Highly recommended 2-hour time frame for capitalizing on day trade, intraday movement. That's the best way to word it, intraday movement. All right. So once we'll start with the daily time frame for example purposes. So once you're on that daily time frame, we're going to kind of take a look back, and you're going to identify the overall current trend of the market. Is it bullish or is bearish? Where are we going? If it's bullish, you're going to locate the most recent swing low. And if it's bearish, you're going to locate the most recent swing high. I'll demonstrate how all that looks, all right, in a second. Step 2 is once you locate your swing high or your swing low, depending on the trend of the market, you're then going to take the retracement tool and mark that swing for, let's say, bullish. Since we're in a bull run currently, we're going to mark our swing low, and then we're going to draw that line up to our most recent swing high. And that's going to expand out our Fibonacci levels across our candlestick patterns. All right, so that's step 2, to draw it out to your swing high, to have this nice diagonal going from swing low to swing high. All right, and it's going to be inverse if it's a bearish market. And then in step 3, you're going to now take your beautifully placed Fibonacci retracement tool. You're going to look at the lines, and you're going to kind of see what's going on and kind of take an analysis there. Okay, And I kind of think I blurred 2 and 3 in together with the connection, because it's really like I tried to make this a step 1, step 2, step 3 for the brain, but it really comes down to like one seamless motion to put the Fibonacci on there, and I'll show you guys how to do it. Right. But I just want to make sure you are looking for swing lows and swing highs. That's like the key step in every one of these is you can see swing low, swing high, swing low, swing high, swing low, and swing high. That's like the biggest part of it. All right, that you get out of that slide. All right, so if you're first time using Fibonacci, you may want to stay between 0 and 100 levels. Emphasis on the may, because the chart may not give it to you. But you can practice there. And so your levels that are more likely to have a shallow pullback, meaning price is like running up, shallow pullback, it's going to be your 38% and your 23%. And again, this is going to all make sense when I slap it on a chart and give you an example, okay? So we do have levels that go beyond 0 and 1, meaning 0 and 100%. These are going to be like your projection levels, or like kind of how you're going to kind of get an idea of where price will go to next if it breaks through your 0 or 1. Okay, so you have some positive numbers and some negative numbers, because depending on how you draw it, it's going to go for, your resistance or your support levels, right? So that's why it's positive or negative. And you'll, again, see how all that comes on the chart, because I have all these levels for the most part on my Fibonacci tool. You can add different levels, right? So you can customize it and stuff like that. Again, I will show you. So these are the levels that you kind of want to, again, don't have to write down, but do want to take this slide. But make note of, no matter what, that these are the levels that you kind of want to look at as far as extending past and seeing where price will go. And like, again, a perfect example is today, because we do have price running up to like it's -50 and everything else. It's very, very nice and beautiful. Beautiful, beautiful. By the way, I have sourced this information. These levels come from the Tiffany, what was the name of that book? It's on the website too, y'all. Secrets of Fibonacci Trading.
Yeah.
Yeah, and so these levels came from there. These levels came from ICT. All right, and I did a little sprinkle of both. I love gumbo. I love to use all my seasonings and make a new recipe. Okay, there you have it. So I didn't just make up that shit. It is sourced, very reputably sourced. All right, entering and exiting. When it comes to entering and exiting based off the Fibonacci levels, it always comes down to candlestick patterns. And you guys who know me, who've been following me for a while, I love candlesticks and I love being able to read them. And I think you become a great trader if you know how to read candlesticks. I think across the board, no matter what you're doing, if you know how to read candlesticks, it doesn't really matter what else. It's like the foundation. So that's my number one. I should probably put a star on or bold that, as candlestick patterns are your main confirmation. Others have used things like trend lines, order blocks, RSI, volume, and moving averages to help enter and exit their trades off of the Fibonacci retracement. So Fibonacci is just a way to easily and quickly set up support and resistance lines, some key support and resistance lines. So it's great for that. And you have to go in and put individual horizontal lines in on your chart. There are some other Fibonacci related instruments out there for those tinkerers that like to do experimental stuff, my science nerds. Where are you at? So here they are for your research purposes. They're called Fibonacci arcs, Fibonacci bands, Fibonacci expansions, and Fibonacci channels, all based off of the same levels, but they do appear beautifully different on the chart. The fans do some fanciful fan action, like it's extensive across the chart. If you guys, once you guys, again, step one, first step one, right? Ground zero should probably be step 0. Find the tool. But once you find the tool, you'll be able to play with all these other tools and have fun with it. See what you like best out of using Fibonacci. Okay. So rules to follow. as far as charting Fibonacci, rule 1, identify the high and the low. Rule 2, chart it. Chart the Fibonacci based off the high and the low. Then rule 3, observe the historical behavior and forecast future movement. So you're going to kind of see where consolidation levels hit, on which level did that consolidation happen is going to be very important when it comes to making your overall decisions and figuring out where trend is overall going. Where does price want to potentially retrace back to? Do I have a big baking candle in there? For those of you who know me and would know what baking means, because that is a trader's crib term only. So I'm proud of that one. So, all of that, reading the candlesticks is going to apply. And that comes to rule number 4, always have confirmation before entering the levels, then breaking. All right, so that is the knowledge and the foundation of Fibonacci kind of wrapped up in one quick mini course. If you want more information, we have books on the Trader Pro website. We have just members of the crib that can help you finesse Fibonacci as well. You have YouTube out there, but the point of the Trader's Crib is to kind of be a resource to help you navigate through the crowd of YouTube, of all the other sources that are out there. We just have kind of put everything that we found that worked for us together in one place here at the Trader's Crib. So thank you guys for that presentation. Let's get down to the charts because we have 8 minutes left. And I know some of my ladies are hungry for this bull run because I am too. Let's get it. All right. Y'all know I'm crazy. I'm just a little bit. It's okay. It's needed. It's necessary. Look at this. So I should still be sharing this screen. Y'all should be able to see the chart right now. Yes. Y'all can see charts.
Yes, ma'am, we can see it.
All right. Good morning, Tandra. I don't know who jumped in here during my presentation. Good morning, everyone.
Good morning.
And so I knew this was gonna happen. Like when I tell y'all yesterday afternoon, I knew this was gonna happen. All right. Like when I say like new. That's why I bought like 3 SPY calls last night before market close. Thank you, Natalie, for dropping the link. Appreciate you. So
it's looking real good. ESG swept that high. So yeah.
Yeah, it is.
I got in yesterday too at the last, right before the market closed and bought a SPY call.
Nice.
Mm-hmm.
I bought 3 of them. That's how confident I was about it.
Yes.
So, because mind you, y'all, like at the end of the day, to make that money I made yesterday,
yes,
was y'all gonna be so proud of me. Y'all ready for how many?
Y'all ready to go?
That was mostly SPY. Okay.
Mm-hmm.
That was a total because I went out and went back in. So that was 12 SPY calls at one time. On this move.
You had 12? Oh my God, way to go.
Calls.
Randy, you are the MVP. Whoop, 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 whoop.
I had to get there. Like, no. So I said, okay. No, and I didn't like mean to. It just kind of happened. And when I went back yesterday to look at everything, I was like, oh shit, you had 12 calls. I was like, well, because I went in with 3, I went in with 6 total, actually, basically at first. And that's when I went in too early. And so then I went in with 4. Okay, once the market started to recover back up, I noticed that and went back in at the lower level to make up for some of the loss of the calls that were bleeding because I just went in too high. So like Maria doubled down with 4 more. And then on my own accord, just bought an extra 2. So it was just looking so good. And I had the confirmation. So I was like, okay, I'm gonna just buy 2 more for the day and then do the whole move that I see. And yeah, It did the move that I saw. I literally waited for 443 because I just knew it was going. I just knew because I just knew the liquidity that was over there. And like the thing was, it was taking forever to do it. And I was just like, oh, so that means you're just gonna do it because you had nothing in the past back there really stopping price. Like there was these small levels here, but I just kept checking it. And I just kept getting it was like bull signal, check, bull signal, check, bull signal, check. I was like, okay, well, I guess I'm holding. And so then the only reason why I knew, because some people made me be like, how'd you know price was going to dip back down and retrace last night? Blah, blah, blah. This order block, so I have this label. I'm mad this alert went off before market went open. So like, I definitely got to close out. Hold on, I got to get ready. I got 4 minutes. The alarm ain't gonna let me forget. Let me close this one out and then get back in for the daily move. Because I gotta close out on holding overnight since it's kind of doing
push back right now.
Yeah, it's doing a thing. But
it's kind of J hookish though. It's J hookish, you know.
Well, it needs to. So you see, I have these all labeled here for a reason because I can't keep going that far. Like we're looking at past data for these highs, okay? And so I labeled everything at this point. This was a 2-hour bacon top, meaning the top of the body of a bacon candle. And it didn't finish yesterday. And I was like, nah, you got to come back and do that shit. I don't want to hear that. I don't want to hear that. You coming back. I knew it. Voila. Okay. So I was like, because this was a bacon and you didn't finish. And so I was like, you got to come back. Most like I said, let me check the bottom. If you were able to scalp this down as like an ICT move, congrats. But overall, I knew that this fat order block here should hold up prices. You had two. You had this one and this one. And this one was smaller and this one was larger. So I was like, you can't, I don't think you want to do both. And so all night, this is what we got. Woke up this morning to this, like, hell yeah, Randy, you know your shit. And then now as you see my label here, this is the 2-hour double top. So that's why we keep going. So now once we hit the double top, I'm trying to figure out what retracement that's going to be. Now this is a 30-minute double top is my next high, a daily wick high, and then the second daily wick because I got like nothing in between there. All right. So y'all can kind of feel where the level pressure is going to probably come if it wants to continue up. I do think that this 30-minute double top is the highest we'll go today. All right. And I could have sworn I put an alert on the line.
What does that correlate with SPY? 450?
It possibly, because I definitely bet on 446.
446.
I was betting on 446.
Okay, all right.
Even for this position I have, so I'm gonna see what it do and if I can hold, because this cradle is yummy. Like I'm just like, you just built up so much push, but I know what's at the bottom, and I'm not naive, so I don't know how much run is the run up before we get the retracement back, and like, do we hold green for the day? Like I don't, you know what I'm saying? Like all that's going through my mind. Do we because I know we're going to run up, but do we run up enough to hold green?
So are you in calls?
Yeah, I'm in 3 of them.
Did you just buy them or you did them yesterday?
I did them yesterday around 3 o'clock. I got in.
Okay. Come on, end of the day entries.
Yes. So should I get in some calls in the SPY, you think?
So if it really is gonna do the 446, God, I gotta get my numbers right, because then yes, you can take this $3 run and like call it a day, because as you see my label here on SPY, I have the top of a 2-hour candle here, and it's the dotted line, it's the finer dotted line, not the dashed line. So, but that's still only a few cents. So we got to see how it really wants to push. And I'm looking at it. I think it may even go higher than that, depending on how, all of us are feeling. And like this would really take out all the highs. So what I could do,
Adobe. Oh, wow.
Adobe's up there. What I could do is get out right now and capitalize on this profit and get back in when shit closed. Because what I also did was did this in my margin account intentionally. Like, I'm gonna finesse this with my day trades. I'm gonna get in and I'm gonna get out the next morning and I'm gonna be fine. You get what I'm saying? Like,
Mhm. That is so cool. See,
because
you are at the level where you can actually tell what is happening.
yes,
It's hard. It's harder for me because I'm not like that good. So I'm just like
and
guessing almost.
it's the candle. You don't have to guess. The chart is telling you what it's doing through the candlesticks. You got to get more deep into the candlesticks. So,
Yes.
and like, for me, Terry hinted us to this. She just didn't say it. So, like, when she was talking about, okay, for one, she said leg in, leg out. That's an evening star. We confirm that. That's just one pattern right there. And that's her strongest pattern, right? Then when she
Yes.
starts talking about the odd enhancers, she's telling you to count the candles. So again, it's like, well, what is it about? And to me, I was like, well, what is it about these candles? What you trying to tell me about these candles that you're not telling me? Because then she would say, well, if it's, 1 to 3 candles, right? It had a stronger odd enhancer than like a 5 to 7 candles in that her leg in, leg out sell zone or buy zone, right? And if you really think about it, a 5 candle like zone is probably going to be a cradle of some sort, because it's not always going to be 5 to 7 candles. What if it's more than that? What if you have like her the thing about, it's not her odd enhancers, it's the odd enhancers in general, because she didn't make that up. The odd enhancers don't account for enough candles on the offset that we just consolidate for weeks, months at a time. So understanding how to read is better than trying to just come up with a quick fix on a temporary situation, because then you can always adjust because you know what you're looking at all times. So this is why I'm preaching candlesticks, because it's literally like learning addition. You got to learn addition before you can learn how to subtract. You got to learn your ABCs before you can learn how to read.
You're right. If you get in now, what strike would you do for the
So
spot?
let's wait for the retrace.
Okay.
And see how the retrace wants to do, because let me go back to the futures to get a read on this. So because we were down here like this, and again, I know these are double tops and 2-hour bacons. Y'all know price ain't gonna live. Well, some of y'all know, like definitely Tiffany, Tandra. I know, just calling people out, just I know y'all know price ain't about to live long between no bacon top and no double top. It's not happening. Okay, like price is going to get rejected quickly. So now we have to see how far down it wants to come back. Like, how strong is this area of rejection? Is it just a kiss type tap? Like, like, hey, can we come in? Oh, give me 1 minute. And then you open the door and we go up. Or it's like, nah, hell nah, y'all got to go somewhere else. And it's a complete reversal. Y'all like that analogy? Does that work for you?
Yeah.
Keep it simple, right? We're at the door right now. So we got to figure out if we're getting denied or allow entry. And if we're allowed entry, and we're going to be able to tell looking at the 5-minute or less candlestick patterns to see what forms it's making to give us a bullish go, that we should take this. And we want to like look close. Now we do have a red folder at 10. So I'm not sure if we're going to stall till 10 and then we'll get the blast off. But either way, the signal is going to kind of start forming itself before then. And you start to just learn. So again, you learn the basics of candlesticks. You learn what a candlestick is, right? And then when you guys know that, I know you guys know that. But then you start to learn Haramnis, tweezer tops, pins, hammers, right? You learn that, and then you start to combine them to get cattywop W's, to get a bacon is really a marabutsu candle. I say that word funny because I really haven't heard it pronounced officially yet to know exactly how it's pronounced in Japanese. So So excuse me on that. I'm all for being corrected. But anyway, that's our baking candle. A Marubutu candle, we call it baking because, you know, we culture in here. Okay, so that's just how I'm gonna leave it. So right now, I believe that we're gonna come down to, we could potentially fill these two fair value gaps because they're so close to each other. As long as we're not breaking past this bottom here, we should stay up to the upside. So right now, since it's pulling back and we're not sure how deep the retracement is, now this is where you could use Fibonacci to help you figure out how deep it is. But for me, since I understand the candlesticks enough at this level, I don't always need Fibonacci. I just know that if candles don't break this level, we don't have a full reversal. That's all you need to know. The candles don't break this bottom. We don't have a full reversal. And it really still applies to Terry's basics, just on a smaller time scale. Now you're taking Terry and you're shrinking it down to a smaller time scale and applying the same thing to be in and out faster because the market has become a lot more volatile than, you know, and that's really all it comes down to. So we're waiting on this level to break. If we don't get a break and we start to see like a W, we start to see this, again, the cattywop, the chart that the cards I'm telling you guys to buy, charts are gonna start to play more as you start to once you start to understand the basics. You're gonna really start to study how the patterns are forming to give you clues that price is still going up, because it happened all right here. Price came up, we reached a high level. Okay, it retraced back down. It never broke. Again, if we were current, all we have is this data to go off of. So we're looking at previous data. Well, we need to ensure that price doesn't break this level. Price never broke this level and gave us a W. You see the W. Now you're like, okay, we're going to go up and test this top again. Well, now that you test this top again, are you going to break the W? No. Bullish signal number 2. Confirmation on bullish signal number 2. Here, you have a tweezer top, piercing line, bottom, like all that's going into play, right? And so again, price didn't even break the shoulder. So you're going up again. Now we've done a descending curve, which is a slight bearish pattern. So you'll get worried again. You're going to get worried. But again, you're always waiting for the break. We didn't get a break. We got a tweezer bottom this time, a perfect one. Boom, we're going up. We shot up. We shot up into a danger zone because we know we got a double top and the top of a 2-hour baking candle, and then followed by a double top is the next high. We know price isn't going to live long there, so this is exactly what we have. Now, because price already visited this level, are we going to break it or are we going to stay up? You still got to ask yourself that question. If we have the bullish push and the bulls have control, then we're going to stay up, and this is just a retracement. It's not a reversal. We're waiting for the reversal signal, which is going to be the breakdown past this level to tell us that the sellers are now in control of the market, or the bears are now in control, and we need to be in puts. So right now,
it looks like it's retracing.
It looks like it's retracing. We're on a 3-minute now. So I'm still waiting. I'm still not out of the clear yet. This is still giving me a bearish feel. I still don't have a bullish signal that this is coming back up for me to enter in. And this is what you want anyway, because you want the best price possible if it wants to kick up here anyway. We want to capitalize on this move as much as possible. If it wants to do another $6 today, because it definitely can, because that's what it
can
would
go
be.
straight to the shampoo bowl.
It could go.
Sorry. So I'm going to go and do hair. I'm going to listen to you. I want to hear if we are turning, if you don't mind.
Yeah.
And then I'll just place a trade and hope for the best.
Yes, it's gonna be I'm going to go for a 446 strike. So I'm gonna go for an at the money strike to be in the money target. 446 is most likely where I'm gonna go for it to be is out, because I believe that price could get that high today if this does a strong turnaround and give us a strong bull move for the day. And we have news at 10 o'clock. So it'll give us a whole thing. And if I can get in at 441, 440, hell yeah, I want all $6 of them, right? So if we can make it. I'll be eyeing the future, so just keep us in your ear. But that's the strike I'm gonna go for 446. So what? Probably go
446,
for next week's expiration next Friday, June 23rd.
23rd, yeah.
So if it takes all day, I can sit in it all day and not really stress about
What is the delta?
it. So we'll have to wait. Let's see. What is the delta on that one? It's 5, June 23rd, 446. It's at 29, right at the cusp. So by the time we want to take it, it'll probably be 30. So it's perfect. Yeah. So do this
Oh,
for today.
thank
And so
you.
you're welcome. That's the call move right now. If this breaks this level and it's putting time, then it's putting time. And because so coming back out to my 2 hours where I see my setups. And as like I can see this doing an M move because I knew this area will potentially be short-lived. I've lived in this situation before. And so I'm really waiting. That's why my alert is actually further down here, because it needs to break this level 44.57 on the futures, which is taking out this small fair value gap here and breaking past it. And I'm putting M action activate. Okay, you give me a double top or something like that, like a tweezer, and this, I mean, y'all, bleh. Give me another tweezer top, give me another bearish pattern, give me some confirmation candles that you want to come down. And at that point, because we have quite a bit of momentum now, again, we have this wick here is letting me know that price may not drop as much as I want it to. So I have an alert here to alert me to see kind of what price is doing, if it really wants to break. And this is really going to be the decision where I'm kind of like analyzing and looking to figure out if I can really ride price down. This is enough money here for me to be content if I scale my position. I don't need the whole move because this is going to be choppy. So I'll be looking for continuation in here if it's going to be like a push to come back down. But you're just going to have to like eye the candles and kind of go from there. If you can like take it and trust it, that's going to come through. And come all the way through to visit this larger order, back down to this larger order block. Now, I recognize as well this wick up here. So I know like this fair value gap and stuff like that, but price does some interesting things when there's some slope, and sometimes it's hard to explain why. And I've just noticed just the wicks just do things, just don't just acknowledge them versus not, and then just focus on continuous confirmation bearish patterns to keep you in the trade through this fair value gap to then come to the next one, because this is where I'm expecting to see the exhaustion happen, because we're coming closer and closer. At this point, this is going to be the run, but could potentially be a run. This break, it just depends on if we have the momentum to push it. So this could potentially be a run down. But once we get to this wick, we're going to start to see exhaustion candles. And that's where it's going to be like, depending on the nature of the market, how it wants to bounce off of the top of the the order block. I'm going to call it fair value gap / order block. Before then, finally coming for the rest of it. So because we have this like arch here, and if this breakaway candle was above this, then I wouldn't have much to say. I would think it would be a cleaner drop, but I'm not expecting that in this case. So it all comes down, the more you read and study the candles, the more you can just tell what things are going to do, how far down it may go, how strong things are likely to hold up, because now you're seeing like haram knees on the 2 hour versus, the smaller time frame, things aren't going to hold up the same. And so we're really just we're pausing. I'm just so proud of myself to execute that. And I'm glad I did it like quickly, because that price was definitely coming back for me to where that was going to be negative. Because I think the total.
Did you get out, Randy?
Yeah.
Okay.
When I got in, because you got to always go off with like your open P&L and not your daily P&L.
Mm-hmm.
And I think my open, it wasn't as much as I would have liked it to be.
Right.
The daily end up like looking at it right now, so it's like $217. Like great. But I actually think I profited a little less than that.
Yes, because of the open, right? You got
Right, because of the open and the way it like ran. So
Yeah.
no worries at all overall on it. But that's how you know, that's how you do it overnight.
Yeah. Jonathan
So
wants to ask you
that's
something.
how you know, huh? Okay, go ahead. Ask
Go
me.
ahead, Norma.
Thanks, Tondra. Yeah, I was just opening my options chain, and I'm new to options, and I still follow, even though I try to do intraday trading, I still follow a lot of the things from IWT while I'm trying to experiment with whatever else flies around me on YouTube. So it's just a bit hard. But anyway, I'm looking at the 446, and I see that it's out the money. And I've never done an out the money trade. So I just wanted to confirm the purpose of it. And also, what does it mean? Like, how do you decide on the 446? Is because you think it will stop there, or what is the meaning of that strike price for you? And like, spell it out for me as like simple as possible. So I get confused with the strike prices.
Yeah,
Thank you so
no
much.
worries. So yeah, because I know IWT teaches in the money, and I'm over here going, no, out of the money. So my main number one reason why I'm trading out of money is capital preservation. I'm not a millionaire like Terry yet. Like I'm a great trader, but most of us are starting from humble beginnings and don't have a lot of capital. And trading
Right.
in the money, if you just look at your option chain, you can see the price difference. I don't have to say anything else to that. So that right there is the reason why we play out of the money. When playing out of the money, the key is to playing with a delta of 30 or more. Because then you got to remember what delta means. Delta means that you're going to profit $30 per $1 move of the underlying asset that you're trading. Does that make sense? I want to pause there and make sure you're following before I keep going.
Yes, I was muted. Can you say it one more time? So the delta has to be 30 or more. I don't even look at delta right now.
I know a lot of people don't. And that I'm trying to get you put it back on your option chain, set it up to where your delta is right there next to your bid and ask price. So you can glance at it and it will help you make better decisions with your trades. Because then you can also say, because another reason why I made so much money yesterday is because I did a 40 something delta, because I knew where price was going. So I was even more confident to be still out of the money, but closer to price action, and also scale, because I'm getting $40 per move versus $30 per dollar move. So what the delta means, when you see 0.30, 0.10, all those decimal points, it means how much money you profit when the underlying asset increases by $1. So for the SPY, every time the SPY moves $1, if you were in a contract that had a 30 delta when you purchased, you will be getting $30 for every $1 that SPY moves on one contract. This is why you skip contracts, right? Because if you buy more, okay. So we're good there?
Yes.
Okay. Now,
Got it.
an additional like confirmation or conviction, or that makes me want to take the 446 strike, is because that is my target. So knowing also that an out of the money contract will go in the money as price is continuing up to that price, hell yeah, now I want that contract. I went from an out of the money contract and now I'm selling it as an in the money contract. Again, look at the price difference. Enough said. Does that make sense? So it makes it easier to pick, because usually that 30 delta is right where we want it to be for our goal. So it makes it that much easier to pick that strike. And going to your goal is also like, well, I know that contract's going to be in the money. I went from out of the money to in the money, so I know I'll have profit. So for instance, yesterday, when now again, depending on theta, we don't look at it as much, But depending on theta and how much time you have on that contract, you know, it's really going to depend on how much profit that contract will have when it becomes in the money. Okay. So some contracts when you buy or when you buy them out of the money, can start you off as a negative P&L until it gets closer to that price, right? That's why you don't want to be too far out of the money. This is why I'm saying the 30 delta is safe, because if you do anything below that, you're risking. I'm not saying that it can't be profitable, but you're risking that that underlying has to really move for you in order for that trade to be profitable. Okay. So the closer you are to price action, the higher probability of the trade being profitable. So 30 or above increases that probability of it being profitable, and it's a nice place to be, as theta is eating your contract too. So for instance, earlier this week, I had bought SPY calls too early and premiums were inflated. And so I paid even more for it. And then price dropped crazy after Powell talk. So they were bleeding. I didn't even look, and I'm glad I didn't, right? Sometimes you got to learn impulse control. So they were bleeding really, really bad, but I bought a 440 strike on SPY, and you see where SPY is. And so I took that risk, but I bought knowing where I knew price was like juggling, because we were at like 439, 438, and I was like, I'm gonna go 440, right? And so I knew that even though theta was eating away at the value of my contract as well, I knew that also as long as price got above 440 to some level, I could pull some profit out of it. Maybe not as much, because theta is a factor that you have to consider. So I'm going to actually, ladies, after profits last week, I think I may stick to a week out because it seems safe and it gives me the profits I need, and it's like not too much, and I can scale and I don't have to worry about theta. So a week out on SPY is a safe spot. So you can hold for another day if SPY takes forever to do the move that you really want, but it's still showing you that it wants to go that way. I don't like to buy a whole lot of time because I'm not planning on holding the contract for no more than 2 days. Like three days is my max. I'm out of a trade if it's not making my move by 3 days.
Makes perfect sense. And because I'm quite visual, sometimes I draw little things as I listen. So if the price now is 441 and you anticipate it to be 446, so that's why you get your strike there, would that increase the time it takes to break even, like your break even point?
Yes, and this is why we want to wait for the retracement move and see how, and get in at the bottom of the retracement move as it's coming back up. So therefore, we're at a better contract price. We're at the good date. So all of that won't be against us, because you're absolutely right. And so to kind of hedge against that, we try to position ourselves as entering as low as possible. And then again, because it's Friday, I want to play out to next Friday. Just in case it does take longer. I probably don't want to hold this because we have an extra day. It's not like we're coming back on Monday, we're coming back on Tuesday due to Juneteenth. So because theta is going to really start to eat at it, and if price doesn't really move, you're in that same predicament of now you're in a losing contract because theta was just ate up so much value of it, and price is just kind of stagnant. So we'll kind of look and see. I'm waiting for it right now. Hey, price will turn. It looks like price may turn because price does not look like it wants to come down. And we'll be positioning ourselves, and I'll take a look and compare the price of the contracts between next Friday, and maybe like taking it to that following Monday, just in case it doesn't give us the oomph that we really want. Because now that I'm looking at the Dow and the NASDAQ are doing opposite shit, that's never like a great. Well, they're still positive, but I'm looking at the futures ones as well. So I'm like, they're not showing the strength that I would like to have to be able to hold something overnight, at least not right now. It could all change in the blink of an eye. But right now, these conditions, looking at my watch list, looking at what the Dow and the NASDAQ are doing, this is not the strength to hold a position overnight. All right.
Yeah.
So that's another thing that we have to just pay attention to for now. So I will see. Right now, I just kind of want it to do potentially 446, but I don't know if it wants to even do that based on how deep it retraces. It may only come back and do 443 and bounce off this level again. Like, it's definitely possible, and we could have a shorter candle today, which may make me sit out the market because I was burned last week from trying to trade this too short of a candle. It's like when they're too short, you just get burned, and it's just better to sit out. So let's see here. We're bouncing off this order block. We came to revisit it. So we came, let's see, go to the 2 hour. So no, we still didn't come for this one. We're coming down. My 15-minute look like. So this is one we kind of bounced off of last night as one I was looking at. So now it's just bouncing here. Okay, we got a bit of a curve action going on. I feel like it's cradling until until 10. So we're gonna know at 10. And once it even breaks down here, I'm still not too convinced to get in a put yet. So I may still pause my puts because my greater risk to reward put is further down here. It's not really this little break move or any of this, because all of these little levels can play a hand at potentially pulling price back up. But it looks like this W is holding. So come on with the WW. And we have 3 minutes till news.
Thank you so much. I have another question.
Yeah.
So usually I look at the futures just before the market opens, and then I look at my stock, and I've been experimenting and trading verticals on SPX. And I started with SPY and QQ maybe like 2 months ago. So I just deleted the noise and all other tickers. I couldn't handle it. It's too much. And I see that you're constantly going back between the futures. I never look at them after the initial look at the morning. What exactly are you looking for? And I see that they're very detailed, as in like charts and everything. But if you're trading SPY or SPX, why is it so important to be all the time on the futures?
Because the futures are trading all the time, and the SPY is just the SPY and the SPX are just mimicking this. They're just mimicking this. Like, they're mimicking the futures every move. And so the futures gives me more data because it doesn't stop. I have more levels to go off of to understand where price is really going to come up to and turn around and not come to any further, because the SPY is going to psych me out. Why is the SPY going to psych me out? Because the SPY stops at 4 o'clock. And the futures comes back at 6 p.m. and trades overnight. And so a lot of times when you see SPY like, oh, it's almost there, it almost filled the fair value gap, but it missed it. It's usually because the futures did fill the fair value gap completely. And so the futures is more likely going to follow the rules on candlestick patterns, fair value gaps, all of that. It's going to follow the rules more. And so I'll pay attention here to what it's going to do, because if I recognize that the futures has already done its move, it's cleared out a bottom, it doesn't have anywhere else to go, and the SPY is still showing me it got like another $1, I'm getting out manually. I'm forgetting my target that I charted based on what I saw candlestick wise on that chart, because there is a bit of like, you have to trade the chart that it's on and respect its levels. But when it comes to the SPY and the SPX, sometimes you can get stopped out a couple cents to $1 short because of what the futures did. And I've just learned that. And so I play the SPY off the futures.
Consumer sentiment is positive.
Yeah,
it's higher than what they expected.
Let's go, cradle number 2. God, these premiums are still inflated. I cannot. Y'all see this?
Premiums on SPY.
Yeah. I feel like they're still kind of high. No, or is that just me? For the 23rd, I guess I'd rather be safe than sorry today. If I come in any closer to, let's see, Wednesday. What does Wednesday look like? 146. Nah, that's a small. I mean, it's cheaper, but the delta is a hell of a lot smaller. All right, well, I guess I'm playing the 23rd for time sake. And I'm still not convinced of what price wants to do just yet. It looks like it wants to come up. I'm on a 3 minute. I have 1 more minute left on this candle. Yeah, I think we're gonna break this top and come up to the 30 and like come all the way through here. The NASDAQ is not giving me
It's possible
convinced.
because yesterday it got up to what, 443.9?
Yeah, but I don't know if it wants to come back for it. It did pretty far down. It'll be another $6 move. The market looks kind of red right now.
Yep, I'll be like, yes, ma'am, I'll take the $6 move.
I mean, I have no problem with it either. None of my other tickers are doing anything. Not Lily, Adobe still have inflated. Adobe still inflated. I knew Adobe was gonna come down after being so high. I saw Adobe pre-market and I was like, boo you, Adobe. Boo.
Yeah. But it's more affordable than it was.
Did it come down? Because I had a feeling it would come
Prices
down
are coming down,
shortly
yeah.
after this. Let me see what the 23rd looks like. I might be able to hold. Yeah, they're better. They're better, but which way is it going? All right, let's take a look at Adobe since the futures and stuff is being trifling small. Oh, damn, I knew I should have took it. Well, I couldn't. I was still in the pre. I knew it was going to fall down because it was too high. I was like, you got up to like 520. You got to come fill this gap. I wonder if you want the whole thing, though, or if you're going to do some trifling dumb stuff. Let's see what you look like on 30 minute. Because you're tech heavy, you don't want to stay down, and you may not even close this gap all the way because I already know you, Adobe. You just don't even care. You don't left how many gaps behind you? 1, 2, 3, 4. I don't even care to count. It's too many.
I know Adobe.
Like, shit. And I'm thinking at this point now it wants to actually close off the order block is how I'm feeling. So I'm thinking we should ride it up. And you see how it has a gap back here? This is a daily to get the overall move. And then it may come up and like hit the top of this level. And then if for one, let me come back down some. There's a gap right. So where it's at, there's this little gap where it went to was a gap. Like overnight, it went to a gap and it fell down, or went through this gap and it fell down because it was at 519. Yeah, it went through this gap and fell down. And so there's another gap right on the other side of it. And so y'all know we don't even need that much money with Adobe. So
right, Adobe make your money real fast.
Real fast. You don't need like look.
All right.
So this
looks
little
like
gap right here, I can
on SPY looks like it's turning around.
Okay, don't
Look at on the 15, it looks like it's a turnaround.
Okay. Let's check the futures. You looking at the futures 15 minute?
I'm looking at SPY 15 minute.
Okay. I see a cradle still. This next candle is pretty good. I mean, so here there's more than one way to play this. So let's break this down. This is the SPY chart. Because it's doing exactly what I'm expecting it to do, dip down, bounce off of this, and come back up. Ideally, because you still have enough money, $3 is more than enough on SPY. Trust me. All right. If you can get in here and you trust that it's going to break the top, take it. Do not ignore that it may not break this top, because this is a top that it needs to break in order to get up here. All right. And and I wouldn't call it like a loose, well, it has some tweezers in it. So I don't know how it wants to do like this. This candle still forming from the 2 hour. It wants to come all the way back up and clear this high. It's just that, so that's a conservative way to take the trade. Wait for the break and then da-da-da. The aggressive, and I can leave the aggressive trade if Tandra wants to leave the conservative trade. I don't know. Would be getting in somewhere down here. And once we see this break come up here and taking it and letting it come up. And so the whole time you're kind of sitting there like, oh my God, is it going to break this? And so the cool thing is you could take profit if it doesn't, if it doesn't break, so you get a little something, but then, you know, it's a little something. And if you don't do it right, then you're at a loss. So, and I wouldn't go for the 446 if I was trying to do that. I would come closer to the money. If
Everybody say you got to probably come in a little bit closer. Yeah.
So, you know, SPY is relatively cheap. So you can do the capital, you can do one contract if you want to do that. And then once it breaks, you can buy another contract. There's more than one way to do it. It's up to you. But while it cooks, I'm going to run and use the potty before this does this move, so I can't take it. So I'll be RB. If you guys have any other questions, write them down and I'll come back and answer them.
So I can tell you ES currently is trading it. So it looks like 8:30 opening is providing resistance at this particular point. And it's just sitting there and then pushing down from it. So it's trading in between midnight open and 8:30 open. So I guess that's what we have to see if that the break is going to happen. Now, if it goes all the way back down to midnight open and then starts to go back up to the 8:30 open, there's some money in there you can make on a climb up. So
All right, guys. I don't know, like looking at the way it like did this pattern yesterday, I don't know. I knew I was gonna be able to get some upwardness overnight, but I don't like this type of top does not look like it's gonna be easy to clear. And I need the Dow and the NASDAQ to get it together. You see what I'm saying? And wasn't that a warning on that post that Maria shared from Sir Pickle? I don't know why I said his name. But I had recreated that post and kind of called it liquidity, like sweep search. I think he called it like search and destroy on his Twitter page. Let's see. Major clearing out liquidity conditions. And I think, if I'm not mistaken, yeah, seek and destroy. And so thanks, Whitney, for that. So on the website, I'll pull this over. while we actually put an alert on this. So let me move this so I can know when I locked it, because my line's been moving a lot on me. Okay. How would I do with the window? Too many screens. Okay. So if I'm not mistaken, on this list, before high impact news, the day after a large range day, bank holidays, have trading days, buy side objective has been met before liquidity opens, and that's pretty much that happened this morning. And yeah, that did happen this morning. So that's one, clearing out liquidity conditions. We check there. Then large range overnight move. Would that be large range? I don't know. London session sweeps. I didn't look for the London session. Thursday and Friday of NFP week. That wasn't. Yeah, right here. ES, NQ, and YM not in sync and looking vastly different. DXY indices moving in the same direction. Yeah, the DXY when indices move in the same direction because they should be inverse. And then when these aren't moving together, that doesn't help either. So because things are a little all over, so we have check here. I didn't check DXY, so I can check that and see if it's moving in the same direction. But we have a check here and we have a check here. So we could potentially be in this situation where we're seeking and destroying liquidity out, saying that there is a little bit of some discrepancies over here. It seems like it could reverse and turn back around. I know that was really focused on like the futures. So they're all green, but I still pay attention to the composite. So we'll see here and what we do. We'll get this break. I think we could take it up. It's at 442. Again, I may be a conservative trader because this looks scary to me today. I don't know if it really wants to do it. I need to push it. Now, once I start teasing up here and it starts dancing and I start seeing it do the little dance, then I'll go ahead and take it. The bullish dance. It's like a bullish, but I don't know what it wants to do. This could be a big W today. I don't know how this wants to form out to be. We could just be a fake out hook and we're coming down. I don't know how the shoulders want to play. A head and shoulder situation. It's 10:13 and I really still don't have a good move. So it's not looking too hot this week. I mean, today, this Friday, for like a good, nice Friday profit tier. The market's kind of all over this watch list. Terrible. Now probably could have did NVIDIA or something with NVIDIA. Let's see. So I do think to like buy and hold an NVIDIA call because I think it's just going to keep shooting up here. Just a little bit more, but I did read an article that mentioned about some sell-off with NVIDIA. So maybe that's the reason why it's hesitating like it is. From some of the major shareholders of the stock of the company, they were selling off quite a few that were turning into some big profits. So we would have to take a look, but overall, everything about this pattern looks like it wants to just continue up for a little bit before coming back down. And I think I was just gonna buy like a month out of time and ride the call until I couldn't. I'm doing the same thing with Apple, so I'm still holding Apple right now. I had, it's doing Apple just moves different and interesting. So I bought a month time, so I won't be freaking out on Apple. I bought out of the money as well. I think I bought like 195. I was trying to see how like it would scoop up here, and if I get anything close, I'll just kind of get out. So we'll see. This is me doing a little bit of swing trading as some of the markets are looking like they're picking a direction, and I know I'm in all-time highs, and I'm practicing some of that too. And it's more just like trusting my my knowledge in these candlestick patterns and just saying, okay, I'm gonna ride until I see that I shouldn't ride anymore. I don't know any other way else to do it. It's just kind of gotta wait for it. So that's Apple. I can see Apple doing this retracement, but I don't see Apple really falling yet. But we'll see how all this data wants to be absorbed. I'm glad yesterday we had a little run there, so that was like exciting. Because today just feels kind of depressing. Looks like a hesitation day.
Yeah, I think I want to thank you guys once again for my nephew got to sit in and kind of do a little analysis. I only traded till about 11 o'clock with him, and then we got off. I let him pick where I got out. So I actually texted him this morning. I said, I'm gonna give you the money we made yesterday to open up your brokerage account, and I'll add a little more to open your brokerage account. So I'm texting my sister now. So I'm like, okay, I'm trying to figure out which type of an account to open for him, since I guess it's going to be UGMA, whatever. One of those two is what we probably gonna have to do. But I guess does anyone have an account open with the child for a minor that they're trading with?
Mine are custodials though, because she's so minor. I don't know for him. How
It has to be, yeah, it has to be a custodial. But from when I'm looking at TD Ameritrade, but I probably need to be looking at, well, I guess it don't matter either one because it's going to become Charles Schwab anyway, right?
Yeah,
But we're trying to figure out which one. But it definitely has to be a custodial account because he is a minor.
okay.
But I guess what my question is that if I open this account, can he trade with this account, or is anyone trading with an account for a minor?
Yeah, you can. You have to do a custodial broker account.
Okay.
Trade it. That's
right. Yeah. But like I said, when you say custodial, there's a bunch of little lists.
There is a caveat. It can't. There's two types of custodial. There's a regular custodial and there's a broker custodial. You need the broker one.
Right. Like that's what I'm saying. I'm looking under the broker. But under the broker, it has a list of things, different ones. Okay, that's what
when I opened Jay's, it was a custodial. It was under who? Charles Schwab? Because
I was looking at TD Ameritrade, but I think it's going to probably when we start applications, it's probably going to turn it to Charles Schwab anyway, because now I know it's in these stuff.
Yeah.
So when I click on open a new account, and under these minor ones, I got the UGMA, a minor IRA, and a minor Roth IRA. Those are the three options I have for mine. And I'm thinking it must be the UGMA, is what I'm thinking.
What is it called?
UGMA, UTMA or UGMA.
That I haven't ran across, so I'm gonna have to look that up myself. We about to go.
Yeah, so when it lists
together.
So if you go to TD Ameritrade's website and you click on open a new account, under joint minor, it lists the type of accounts you can have. Now, all these joint ones up there are like, these are adults. The joint ones are all for adults.
Okay.
And then the minor ones are just these ones.
I haven't looked.
There's a guardianship, but that's court. That's the court doing that conservatorship. And then the other three are minors. So anyway.
All right, I'm gonna do research on that this fall, because
because
I may want to do one for Jay on this side of things, because then I can, because right now she's in the Charles Schwab, so I haven't been trading as much because that's a whole nother, and when everything lives in one house, it's just easier, and especially since it's you could toggle over the accounts very easy with Thinkorswim, and yeah, I need to just bring.
Yeah, now that I know that when I apply for my futures, being able to trade futures, although I applied through TD Ameritrade, the answer came through Charles Schwab. So I just,
it did.
So
they're all linked.
I know, so it's like, wait, who is? Am I being scammed here? But then I had to keep remembering, wait, girl, they're switching over. But let me look at it on the chart. I'll look at it on the Charles Schwab side. So anyway, so that's what I'm looking at, because from what I can tell, even with the UGMA or the UGMA, I can open it. I don't have to necessarily even use my sister. I can do it myself for my nephew.
Yes.
Yeah, and so, but I want her to be involved in this. So I want her to go ahead and do it, because I want her to have access to the account.
I mean, at the end of the day, well,
it's her baby
account. Nobody has access but him when it comes to withdrawals.
Once he gets it becomes his account once he turns 18. But again, I want
even until then, you guys can't pull from it.
No, we won't be pulling from it. Oh, yes, you can. You can pull from it. I just read that. Now, I do know you can pull from it, but it has to be for him. You can pull from it for him. Now I
Really?
had UTMA. I know the
thought you
UTMA
couldn't
and the
pull from them at all. It was just locked.
Oh yeah, you
They
can.
can't pull from until they're 18, but pretty much nobody can touch it but them.
No, I can pull from it. I had UTMAs for UTMAs or whatever. I had them for my children. That's what those are the accounts I had. I could pull from it for things for them on their behalf.
Okay.
And then when they became 18, the account became theirs.
Got it. Okay.
That's what's and that's what I know them to be. That's what I had for my children when they were that's what their savings accounts and their CD accounts were, because I could pull from them because I definitely pulled from when my son went off to college and stuff like that. So yeah, it because he wasn't 18 yet when he went off for college. But anyway, I was just wondering if anybody was trading a kid account, and this was
not that one, not that
because
one.
he will probably. So we will let him actively trade on this account. I just needed to make sure we were getting the right thing.
Yeah, I got you.
Yeah. So I know we're looking at SPY. Of course, I'm still eyeballing Home Depot. Oh, it turned on me and I didn't pay it. See, it keeps doing it to me. Dang it.
Okay. You gotta just focus on it. You got to take one day and just focus on it.
I do. I really truly do.
I wonder if it's making a W to go up. I wonder if I can play Adobe Calls. And so the SPY, so this to me looks like it's making a W. But I'm wondering if it comes back for, so now we're at the 2 hour bang top, we'll come back for the top of the 2 hour double top. So if this is truly a W, then the takeoff is going to be somewhere right here. So, and that will probably equate back up to 443. And at that point, you have to decide if it's going to go to this next zone, 4502. And I don't know, like today is a slow day. So even though it's giving me kind of like still bullish vibes, it doesn't mean that it's going to do this move today. It doesn't have the force like it did yesterday around this time. We had more movement by then. And
so no trading Monday, but didn't we hold up on Memorial Day? I think I had bought calls on Friday.
We did. I think I may hold. Well, it may be a time to hold, but the thing about if it's better to hold overnight, it's better to get in the afternoon. It's not better to get in the morning because the premiums are higher. So it's better to wait for the afternoon. If it's going to be slow, it's only going to run back up to 443 and test this top, but give us like some bullish pattern that it could finish going to the 446 next week. Then we can hold it. And so you're really going to have to kind of go throughout today and kind of look back at the chart, set some alerts, probably take the more conservative route and put it up here, put another alert up here to see how it's like forming and breaking, because it should, well, I wouldn't say it completely should. It's hard to predict how the day going to go, but if it's a W, that's going to just take all day to form a bullish W, and it may be like a small like green candle for the day, then I'm expecting price to come up, do its thing, have a slight maybe impulsive move to here, trail I don't know how the day is going to be the day, trail up here, and then kind of like bounce off of this top, because it's going to definitely still come back up to this double top, and then kind of close in a way that's like it maybe left it hanging, like it still looks like it has some more business it wants to do, but everything below it is going to really support a bullish move. That's how we want today to kind of end.
Yeah.
And we can
right
get
now. It's moving now.
It is. And so like again, this is a move, like if you want this like dollar, but I would love for it to break and do the higher. Like it's just better than to stress over this dollar. So because going back over here to the futures, and just because my watch list I have 2 different watch lists, because we have so let's look at DXY. Look at all these things to kind of tell us to kind of maybe wait. So DXY is green, and the SPY is and everything, SPX is green. and that's not ideal. Like they should be inverse of each other, right?
Got it.
So
Okay.
that's another check mark on that list. So maybe I should make this like maybe I should create this. Where's Natalie at? Natalie, can we make this a checklist of some sort that we can use as like part of our trading strategy of like, let's check and see for the day what type of day we have before we jump into this market? Because this is, you know, the first hour of the market and we're checking off quite a few check marks. We have I know earlier they were off when I was looking at them.
What are we checking?
This major clearing out liquidity conditions post that I have on the website. We're gonna make it into a checklist. Something pretty and printable. So what was I getting at too? Okay, let's see. Things are turning around, at least from where it was this morning, as far as the YM and the NQ being off. They're looking a little more together now, but they were off at the beginning. I don't know if y'all caught that, but they were. Okay, the composite finally came back around. All right. But again, we want to be careful because we were kind of wishy-washy for a while. I mean, it can all turn back around and get on the same page. The next one we have is the DXY and the indices are moving in the same direction. So if this is a daily, we have a green bullish candle. This is a daily here, and we started out pretty bullish, right? We just did a retracement. Would we want to say this is the same direction or inverse? Because if it's the same direction, we may want to stay away. I'm not good with the NWOGs. The NWOGs is on this list because this list was taken from ICT. Too many I's. Yeah, this is why I'm the trade script. TTC. Anyway, I don't know. But I have the link to his original source if you guys want to follow Sir Pickle, who is an ICT trader who breaks down some of his concepts into simpler language when ICT is a little complex. So I don't do NWOGs a lot, but for those who do, that's why I added it on this list. So if you have converging NWOGs, that could be one. I don't look for them. So Tandra, you would have to tell me if the multiple NWOGs converging in the same range. Multiple NWOGs converging. So that's another signal for it being like a liquidity seeking day, or it's just clearing out liquidity, and we're kind of range. So I like it. And I like this because it helps you pause, it helps you go sit on my hands, it helps me go, don't force a trade. Right? So you won't be going, it looks like it, oh, wait, that gets so aggravating, I'm telling you. I mean, like you can only do that so, I'm not gonna say aggravating. You can only do that so many times per week. It gets exhausting, I would say. You want to shave your energy. So this looks like it really does want to come back up. I do think I like the way it looks on the 2 hour. Look at this 2 hour. So I'm gonna go ahead and jump in here and see what we can finesse. I'm probably gonna jump in a little. Do I want the dollar? Do I want to wait? Do I want the dollar? Do I want to wait? Do I want the dollar? Do I want to wait? Do I want to practice a scalp skill? Let me do it in Sim because I want to click the button and wait for my better move in live. That's what I gotta do. I gotta exercise it in Sim. So this for aggressive traders with this pattern, you will be wanting to get in now. I didn't open my Sim this morning. But hopefully I don't miss it because it's probably about to do close to an impulsive move we're getting on. It's 10:30 to 11 o'clock range. So you go ahead and take at least a 443 call. You can take the 446 one once it breaks. You can always get out. I always recommend having a cash account if you don't, because that's how you can take advantage of these day trades with ease. I'm going to miss this trade unless it gives me a little bit of a pullback breather second to get in. But this is a perfect Cattywop W to tell you that this is bullish and that it's going to go up. All right, but again, you're right at the top of this range, so it's a quick scalp until you confirm that we're gonna break it. Now, if you have, again, just reiterating, if you have some conviction from some news report, something else that's like it's gonna break it, then by all means take it at the most aggressive spot you can. But only do that when you have other fundamentals, I think, on your side. Maybe not technicals, fundamentals. So yeah. So I'm gonna go at the money, 443. For this move, as long as this doesn't fail. What's a 5 minute? What's a 3 minute look like? This is a retracement candle you want to get in on. Go ahead and take it while it's deciding as an aggressive trade if I can get in. At 264. There we go. And then I will immediately set my take profit if you was gonna scalp this dollar. Because I'll actually have to move this line down and change ignore the label on this line. Lots. So probably there's fair value gap up here. So potentially close that one. So that's like 442.98. That's what, like, this small dollar gonna be worth it sometimes because it really don't give you the full dollar. I'm gonna see if I can get it to, if it pushes up here and I can get it to close at like the 443 premium price, which is gonna be, and will it even be enough profit? Well, probably be close because I'm at least at the money, but you gotta come close. You gotta come close if you're gonna try to scalp a dollar. You can actually make some money on it. 443. I'm still not gonna get out yet because this is just an indecision. I'm trying to figure out where I want to take this premium because it's moving a lot. Now I feel like I'm Tandra sitting over here clicking and watching price and changing the stop order based on the underlying and how the value's going up. Like, wait. I'm gonna take it right here. 296. That'll be a little something. I did 3 contracts. So let's see what we get. We scalp this dollar up. And then if this breaks like I needed to break, and then we coming back over here in the live. And if it wants to run up all for the rest of the day to get to 446, I don't have any problem with that move either. I just need you to tell me what you want to do so I can follow suit. If you don't want to do a snail up move, then I'll leave you alone. Okay, if you're gonna be trifling for today, right? But you know, I really like the way this 2 hour looks. It looks like it wants to come back and all the way up on this, but I could be wrong. It looks like it wants to take it out and even go further past it and hit this alert up here. And I'm gonna stick an alert there and take this alert off. No, I don't want to do that. Cancel that. I just want to take the alert off, but I want to keep that line there for that bacon candle. I thought delete. Yes. Yeah, click no. Okay. Just so I know where we're at as far as the levels go, because I can't keep going back over there to whenever that was. It was like last year sometime. It's too far back. So this is what's making me really kind of like trust the call action, but I want to ensure I'm right because of this level, because of this wick. This is a 2 hour view. It looks like it always looks good till it doesn't. And like, I see the W, but this is that wick. So, you know, it's doing what's supposed to do. It looks like it's gonna do what's supposed to do. We got a W. We do have everything that is in alignment with we could potentially like hold and get up there. But it always looks good until it doesn't, because it could come right up here and just fail. So and it can really just say, okay, this top is really that strong, and we got to actually do a little bit of a retracement next week instead. And that's what I'm trying to figure out. Are we staying up? Like, you want to blow, or you want a little tracement action? Like, what you want to do? Because it's a lot of run up. It's a lot of run up. We've got 1, 2, 3, 4, 5, 6 green candles in a row. I mean, I'm good for 8. Like, I would love for it to go for that candlestick pattern that I saw in my deck of cards, right? That showed us like the 8 higher highs before it turns around. Like, I'm good for 8. Okay. The candles can look vastly different as it makes 8. It can be short candles, it can be long candles, as long as the high is higher, meaning the wick, like the overall high of the day is higher than the previous high of the previous day, then it, and so to me, 6 saying it's not done yet. It need to do 8. It need to stick to the book. But just in case it fails and the pattern doesn't want to do that, then we have that fair value gap there. And I'll be looking to retrace that down into next week in order to potentially maybe come back up. I don't know what the market wants to do. I'm for bullish. I think the market may want bull until the next FOMC meeting, honest to God, because they said they're not really hiking interest rates. So it's like, well, we can just do what we need to do and just go up. What other news do we have? I mean, tech is like booming right now with AI and stuff. So what do we have in our way that would want the market to come down? Anything that I'm missing? Any news that I didn't hear? I hear crickets. Crickets.
Yeah, I haven't heard anything. I just hear that.
Yeah, because I know Tandra's on it. I'm like, if I don't hear Tandra.
Because I've been like, I'm a bull, so I'm like, blow out the top. Keep on blowing out the top. So keep on going up this volcano. Yeah, I'm just hearing that. Are we still in a bear market? Probably not. Everything is leaving.
Yeah, it's leaving, and we're doing like slight retracement. So now it's just a matter of knowing how to play impulse versus retracement, large candle versus small candle, knowing when your moves are, because I'm feeling that way too, which is what I want to be feeling right now. Because look, learning how to trade in a bearish market is, well, you know what? I appreciate it because it is an expedited learning process.
Right. Yep.
I don't think I would have learned trading this fast if it wasn't for the bear run last year and all this chop and all this crap.
Yeah. So yeah, when the bull, like we're in the bear market and the bulls were running through it last summer, that's what drugged my butt. And I was like, I need some different strategies. Yeah. We got to do something different.
And so, I mean, again, thank you, God. The recession is reset and let all the little people come up quick. So, let's look at our friend Adobe, because the SPY ain't doing nothing too fast, and Adobe will at least give me an impulsive move faster than this. Like, god damn. And it'll be fast, and it'll at least be like $4, like that part.
Yeah, because SPY is ranging right now. That's all.
Yeah, it is. It's not. I think we're gonna hold as a green candle. Well, is it even green on SPY? I know it's green on the futures. It's not. So we'll probably. It's not green, but it's still. This is still bullish until we have more information. With these two candles here, so we're at this where, you know, the futures is in exhaustion area warning zone. So I'm not surprised to see something like this. We close the daily fair value gap and it's like boom right there, like done, right, for the top. And so totally fine. That's why it's time to look at the other tickers when things are doing that. And Whitney, I totally overlooked your ICT treasury bonds. Yeah, all those confluences, it's just time to trade individual stocks. Like the hell with the ETFs is what that means. Like, don't worry about the ETFs. If you want to do the straight futures on something, then fine, because it's straight futures. I think you have more control over it. Just leave the ETFs alone and come over here to this side of things, which looks like, you know, if Adobe keeps its W up, it can just come back up to where it was today if it wants to. I don't know, that's pretty far down run. Like how much of that? Can you come up 50% of that? Can you do this today? 511.
Okay, so SPY looks like it's trying to give us some move. It's downward, but it's trying to give us some move. But Adobe, what is Adobe doing? Yeah. So what I know about Adobe, when it has earnings like that and it rocket ships like that, it will retrace. It has a tendency to retrace back down. So you may have to watch it, see if it retraces back down, and then get in it when it makes it, and then it'll go back up. Again.
Yeah, I'm trying to figure out if it wants to finish this.
Yeah.
Or
Yeah,
is this like a kind of a W-ish, or is this, or should I be looking at this more of a bearish continuation squeeze pattern? You get what I'm trying to say? Like, what is this overall? Is it going to be a continuation pennant or down, meaning it'll break down? Or is it looking at the way, oh my God. All right, y'all bear with me. But do you kind of see where I'm going, Tandra, with it? I think Tandra can follow me, if anything.
Yes, I see it.
Little mini W in there too. So it's like, which one are you trying to do? Are you trying to go back up? Or are you trying to just wedge fall down? Does that? Yeah. We got two patterns in one. I don't know which one to go with. You got to wait for the break, like literally wait for the break. Because the fair value gap should hold weight, but you know, I don't know. AI really want to take off. Adobe may go with it. Adobe got some platforms, you know, that I could definitely see using AI with. As far as some of the creative tools go. So this is where I'm looking for Adobe to kind of stop out. I don't even know if it wants the whole thing, because I think it does want to stay bullish. I'm not betting on a full fair value gap close here. I'm betting on 495.
Adobe is, as you can know, that it's very bullish. It's a very bullish stock, which is why I say I'm only going to ride it going up, because I can't figure out down. Unless I'm just in the momentum and it's dropping, and that's the only time.
Well, that may be the day trade I may be able to get, because I don't have nothing like this. The SPY and the futures is just really not doing it. It's just not doing it. And it's, it failed. So
it's turning bearish. It's turning bearish. Yeah.
So at this point, because I went in for a call, right, guys? So this is how you manage. So you wait for it to, unfortunately, you do have to, this is what's called a stop loss. You have to be okay with taking a little bit of a loss. But if it breaks down here, I'll get out. And then I'm not gonna worry about it. And then I'm worried about over here for my real money, because Adobe gonna give it to it. And let's see what I can do though, because Adobe is, it came down a little bit, so I just gotta see. Because if it does this, if it scalps it quick enough, I can come a little closer. I have played with, well, not 0DTE, but at least one day with Adobe. It's just so expensive. It's not too bad. If I did 495 and did the 490, that's not bad. That's reasonable. Why is the downside cheaper than the upside?
Because people are bullish. That's why you got more people
Okay.
probably trying to go.
And that's what, so that, okay. Like it's drastic. You see it?
It is drastic, yeah. Because you probably got more people buying calls than puts. All right, SPY's acting like it's trying to break down. So
Yep. It is till it isn't.
yeah.
Because of Juneteenth, we may have like it just may be slow day. Like nobody's trying to get out, you know, it's a holiday. It doesn't this list say something about holidays too? Is it before a holiday or after a holiday? Yeah.
Oh, listen, child, I don't pay attention to the rules.
Bank holidays, half days, and the trading day that follows.
Bank holiday.
I don't know if it's Today's not a half day, is it?
No, she's just trying to. Yeah, it's not happening. No.
I didn't think so.
Oh, Tanzis remind us that it's quad witching.
Okay, there's something. There's something
Yeah.
for this slowness on Friday.
Yeah.
I'm like, what is it? No worries.
Is ES gonna go negative? Girl, don't be trying.
Maybe put
There you go.
That's why I got on my call this morning. I knew it was gonna be short-lived. Put in time. Potentially, let's see if it breaks.
NASDAQ is negative.
The NASDAQ's doing what?
Dropping.
I think Adobe wants down.
It needs to go down.
I know that the call sign is higher, but I'm wondering if this discrepancy is saying that it's gonna do an impulsive move down, and I can do a cheap scalp down. That's why I'm reading into it because I'm like, the discrepancy is big, huh?
Yeah, you probably can do it because Adobe will run up and then it'll turn around and go back down, and then it'll run back up again. So you know, if you see it running, it's gonna probably go ahead and run down. Do your scalp and get out. It does that. I've seen it do that. When even with a great earnings call, it'll jump up there and then it'll turn right back around. And hit back.
That's what I'm thinking, because it's not it's a wonky, ugly ass W, so it's not really there.
Yeah, this double bottom. Yeah, the tweezer bottom holding this up though. I'm sorry, I'm not Adobe, but I'm looking at SPY. That tweezer bottom seems to be holding up.
I don't think we're gonna. I don't know if we really want to drop. Like we could clear out this order block, but I don't know if we want to drop like and retrade. You know what I'm saying? Like reverse. I think.
Oh, you think it'll go down even more? Okay.
Because even if this candle, if we look at SPY from the day from the daily, okay, this candle really yesterday's candle was huge. Yes. So we would have, if that was the move today, we would have did that already, right? That run up, the run down thing, and it's 11 o'clock. We're not doing that. So, worst case scenario, we come down to this purple line, which is to yesterday's high, right? Or not yesterday, the day before, which is the close to this fair value gap. I don't really even see that move today because all of this is so like wonky. They're you know, everything's kind of Christmas tree looking. So I don't think, and I think that's a sign that yes, today's candle is a bearish candle, but we're not really pushing down. Right. We're tracing a bit, gathering up some liquidity so we can finish this upward move, because this is why I'm saying, okay, when I come back here for you guys to see it, because I'm going to talk about it, and I haven't got back here. Here it is for you guys. It's all this. It's this big ass candle. Okay. And
Oh,
like,
that's what it's doing. It's climbing that
it's
candle.
climbing
Okay.
this big ass candle, and
Yeah.
it's so big, it's taking a while. That's why, like, you gotta just pace yourself. So I marked off every level I could in this candle to get you there, because it finally did. You had this big fair value gap. It did that yesterday. That's why I was convinced on 443, because if I moved this 440, that was right there. I was convinced on 443. Yesterday's move, the way it was pushing, I'm like, nah. There, and it's a daily fair value gap. I'm like, you're taking out the fair value gap. And then it also aligns with this liquidity clear out news, because it says the day, like, after, like, you know, impact news or whatever, what was it? No, before impact news, and the day after a large range. So it's just weird. But yeah, so I don't know. I knew because of this all of these influences, we were gonna eventually fill this fair value gap. And yesterday was the day. And so now, okay, that's one strategy. So literally what I'm doing, so let me walk y'all through this slowly, because this is really about to apply multiple traders on one for me to see this, okay? This is fair value gap trading to here, got out. Now I believe that price will come, it's probably low in here, but I'll fix it later. Price will come here, 444. This is Terry, right? For the same candle, okay? So I take profit one here. If it's going to give it to me, depending on what it's going to do, maybe I'll take it to 440, but I'm not negligent of this wick. So, and then, so that's Terry to take it up to here, knowing, I think this is just a little bit of, this is a daily candle though. So most daily candles, most large candles will kind of retrace most of this is 50% though, by the way, as well. About 50% of this whole candle is about right in this zone. So it could stop here and we get like pulled down. But if it wants to follow, potentially follow, like, I'm going to clear out a large candle rule, then you have this left up to go. Don't count this wick. You have just to here. And the reason why we may have a strong pull to the 448 line, which is the top of this long candle, the only reason why I'm betting on it is because it's also the entry to a gap that has been retested and not filled.
Okay. No, makes sense. I got it.
Mm-hmm.
Yep.
Yeah, okay. There's a
So
gap
this-
right here that hasn't been. I'm like, you got to come back and test the gap. Like, we all know gaps are magnets too. Like, so, like, that's what I'm saying. It's a little bit of everybody kind of implied in one, but you could see it. So I'm actually would really love 448, but it may not happen until like next week. You know, we settled on this news, then like next week we can maybe like move right along and like hit this zone and then come out. If not, take the gap.
Yeah.
All right. So
Okay.
there's some levels in here based on the 2 hours. So based on the 2 hour chart, there's a top of another large 2 hour candle that looks like this one. It's just the top of it right here. So that's giving me my 446, taking it further up into this candle. Because you got a lot of room still up here to play, and depending on what trader you follow, that's all to take profit target in here. And that's why I'm like, man, you got to read the candlestick patterns, because it's just tricky if just going off of one thing, because there's so many things playing off of each other within one daily candle, as I would say. So that's how I see it. And you even still see here, you got it's illuminating another fair value. I'm ignoring this one, but because it's just too much. You know, I'll be having too many lines everywhere. But one step at a time. That's how I'm looking at it. So how do we get up to 448? What is that going to look like? You know, that's $8 move for SPY. I could definitely, you know, there's definitely going to be some retracement candles in here, some red, some green, some chops, some, I don't know, you know, but you just got to take the impulsive move when it gives it to you type of thing.
Mm-hmm.
So We're not breaking. Again, then I had to put the alert there. You didn't even come kiss it for me. So we're not going down. I guess we're just gonna oscillate. We're gonna stay up and oscillate in the upward range and then continue. Looks like that's the verdict. And Adobe can't even break down for me to finish a fair value gap. Like, it's just, don't trade today. I really can't do nothing else than what I did. So congratulations if anybody else took the overnight move for today. We don't have a good tier for all the people who wanted to get a good day trade move. Tier on that. So let's go back, and because I am in SPY and SIM, right? Going up. So it didn't alert me to go down, so I'm still in it. All right, so here's where the problem comes with theta, and also if you don't buy enough time, this is where theta is about to eat your butt up, because you were expecting it to do it and it didn't do it that fast. So if you didn't buy enough time, then when this does come back around to price, it's gonna still be negative because you didn't have enough time, and theta is gonna eat you. I shouldn't have that problem because I bought a week out.
Right.
Yeah, I bought a week out. It's down $100. So I bought a week out, so it needs to like do it, but it didn't. This is how I pick the stop loss. Like, I don't, because if you sometimes pick them off of just price, they can put you in the wrong spot. You should really pick them off of the charts. And so this is kind of where, and to be honest, because I really would want to not get stopped out. Like, I'm in this fair value gap, so that I like this wick because it's also in this fair value gap that's showing here. So it's like, okay, if price is really coming in and it looks like it wants to do it, and I know I need to get out. So I like this level here for this. You could take it either a little bit above or a little bit below. That's up to you. But I have been putting my stop loss triggers a little bit, a couple cents below, because I really don't want to get stopped out, right? I'd rather it turn and me make my money, right? So I know that I tend to trigger or execute my alerts, and you want that habit because when it is time to get out, you want to get out, you don't want to hold. So because the rule is to execute my alert no matter what, then you want to try to pick a safe space as possible, because if it hits it, you have to execute, and you need to live with that. You need to not be like, oh, I feel bad. No, you need to be like, I stuck to my trading plan. I feel great because I got out where I was supposed to get out, right? So you won't lose too much, okay? So even if it pierces your line quickly and you end up getting out, and then price turns back around, it doesn't matter. It psyched you out. It is what it is. Everybody gets faked out once or twice in the market, and it's going to happen, and it's going to happen more than once. You were never going to not get faked out. But I've never heard of 100% win rate. The highest I hear is 90. Highest I hear is 90. So that means those people are still taking L's, still getting faked out 10% of the time. Okay? I don't care how good your strategy is, you're not going to get it perfect. I don't even think the robots got it perfect.
Right. Agree. I agree.
When you add in the trading box, I don't even think they get it perfect every time. So I'm staying right now as far as sim goes, waiting for it to break back up, and I have the time to do that. So I'll hold. If this pattern continues to look this way by 3 p.m., you know, I may get into some positions to hold for next week. We'll see. We'll really see. I need the market to finish out the day and kind of give me an idea what it wants to do. Because right now it doesn't really make me want to hold in live. Like, I rather just, like, I don't mind holding this in sim to see what it does. But if the chart stays something choppy, crazy choppy like this, and doesn't give me any good bullish chart pattern that I can read, I'm not going to do that. I rather just get in at the moment next week than like try to speculate what next week is going to do, what, you know, riot may or may not go, because, you know, if the wrong cop shoot the wrong Black person over Juneteenth, right? Like, there is going to be,
Like,
you know.
Don't do it. Don't do it. Just nobody put your bullets away.
Right, that's what I'm saying. Like, just
Rubber
stop
bullet.
with the madness.
Right.
I'm tired of hearing people getting choked out. Like, so I'm just like, what is going on? So, but it doesn't affect the market too much. It just depends. If we riot, it will affect the market, right? Depending on what happens, and if we riot, it will affect the market. So I'm looking, my eyes right now are on like DeSantis, stop fucking with Disney. Trump, stop fucking with the little people. Who else would get people to rally? Those two are the major two. DeSantis and Trump. Ugh, just chill and let us be. Right? But as long as we have a good weekend, I'm expecting the market to come back next week and continue up. I give that like speculation. For a little bit, test out these like highs. There's like some order blocks on the daily that are like big daily blocks. Just get those over with. And then I guess that's all I gotta say. It's just and then we'll see which way we want to really do. If we want to break that top, we'll see what news comes out, like what happens in the market to see which way we're really gonna continue. Like I'm just taking it one level at a time as we're coming up against each of these shoulders. I love the bull run, but I know we got to do a deeper retracement at some point, and I'm here for the deeper retracement as well because I learned how to trade in a bear market, and so we can take advantage of the retracement moves too. So it's 11 o'clock. We don't have to stay on here till 11:30 if we don't need to, but I want to give this time to open up for questions. Want me to explain anything again? Any other things that you were thinking about, Fibonacci related, order block related, since you heard the term today? Anything that you guys got?
Hey, I have a question.
Mhm.
And it's related to Thinkorswim. When you look at the market maker, where can I find the explanation of that and what all that means? Because I don't know anything. I've heard you guys talk about it before, but I never really understood it.
So a great feature of Mighty Networks is the search feature at the top. And I probably need to move because I made that post a long time ago. But if you put in M, it should come up because of course, now right when you want it to do something, it doesn't. Did I delete it? I hope I didn't.
They should have something in Thinkorswim, right? That can explain it.
It's not just Thinkorswim. I don't know. Did it pop up anywhere else? Do you see it on any other? Does anybody else have that on another platform? I think I put it under here. Maybe that's what I did. That's why it's popping up over there. So I'm like, I know I didn't delete this post. Okay, so there it is. So Moneymaker, you put in M. This post comes up on common Thinkorswim platform questions. And this is found under the table of contents if you were scrolling. And there's some videos on how to reset your paper money account. There's some videos on how to customize your platform on some basic things. And then here is from the data that I found and the research I found on the web about MMM and what it is and how to potentially use it. I don't have a good like video I haven't come across a good video that somebody already created, and I have not yet to make one explaining MMM, but it's market maker move. I'm sure I would assume it pops up on other platforms besides just Thinkorswim, but maybe it's just a Thinkorswim thing. But what it means is when the market prices excess volatility into next option's expiration date, MMM pops up and shows the expected magnitude of an upcoming move expressed in dollar terms, meaning that an MMM of plus or minus 4.5 based on applied volatility, the market is expecting a move of up or down $4.50 over and above the usual price variability. So if your ATR, say if you pull up on your chart, your ATR and your daily ATR is, for example, $5. it's ranging $5 for that particular asset. If the MMM is showing $4.50 on that standard average $5 ticker, it's meaning that it's going to move an additional $4.50 up or down to its normal $5 move, right? That's what that means. So it's like the added move, the added amount of money that it could move based off of excess volatility, like news.
Yeah, I know, but what does the next options expiration date mean? The next day? Or, I mean, I don't understand. When the market price excess volatility into the next options expiration date, what does that portion means?
The next option, you know what? You're gonna make me research it. I don't know, and I'm gonna find the answer.
When
Next
the
option,
market
because I
price-
found that because I get what you mean. Like, is that the actual next? Because I guess it depends on that ticker. Is how I read from what I know of options, because not every ticker has daily expirations, right? So it's gonna apply based on that, how that company creates its options contracts and expiration dates, right? So Adobe usually only has weeklies, like it doesn't have any dailies, versus the SPY and SPX has dailies. So I would assume that, like, for instance, we saw this week, the excess volatility went into next week's Adobe contracts. That was the next expiration date, and they're all freaking high as hell, right? And Adobe was inflated as fuck to trade. and Triple M has been in the market pretty much all the earlier this week. I don't see them in here. Wait, let me go back. No, they're in here today too. So
I saw them in there today. That's why I was asking.
So like, I think with that, based on just what I know, and I'll get clarity. I ran into my list now on clarity. It seems like it would be just depending on that ticker, it is going to be that next day or that next week. It just depends. So as y'all see, for those who are not on Thinkorswim, this is where it shows up for you guys, shows up for us in our desktop platform. I don't even think you see it on the phone. Do you see it on the phone?
Yeah, I see it on the phone.
Where is it on the phone?
But remember, I only use the phone. That platform is hard for me to use. Here, let me show you. It's when I was looking at some quotes. That's why I brought it up. Here, let me see. Going to watch list, and let me pull something up. Let me put SPY up because I saw it somewhere today. Okay, so if I go into my watch list into SPY and look in SPY, it says MMM plus or minus 1.890 under the price, and then there's a seller buy right on the side of that. So if I'm on my phone and you go to your watch list and you pull up SPY, you'll see it right up under where it's saying
I see it.
up or down.
But you see it no matter what. Okay, it doesn't matter if you're on an option change or a chart. I see it. It's like it's right up under the price. Okay, so perfect. So yeah, I have to see if that's on other platforms. So it's gonna be literally right under price. If you're under that individual ticker on your phone. All right. So how to use it? You can potentially set entry and exit points. You can add the MMM to your list of points to watch as a possible profit target. So if you're betting on like price going to, like, say for instance, the SPY, since we're looking at SPY, 446, and the Triple M was showing you something. The Triple M is never really like over $2 for SPY, 2 to 3. But say it was something crazy like 4, 5. Okay, then you can say, okay, I'm expecting price to go to 446 plus $4 based on the MMM, and you can set your target profit there, believing that, okay, we have the momentum in the market today, we're going for that price, blah, blah, blah. Strike selection for option spreads. You can set strikes of a short strangle, 1, or that's supposed to be 2. I didn't even realize that typo was there, but luckily I can edit it right now. 1 or 2 out of town. I believe Randy. 1 or 2 MMMs wide. I haven't practiced this. This is something I came across in my research. Or you can sell iron condors with short legs, 1 MMM around the at the money, and the long legs 2 MMMs apart. Okay, so I can kind of break this down for iron condors. I don't do strangles as much, so that's kind of hard for me to put into perspective for you guys. Does anybody do strangles in here? if anybody I think would do strangles, would probably be Tanza because she already doing debit spreads. But so I know I don't really do them, but I do sell iron condors. And so with your short leg, so if it was, so let's not think of iron condor, let's just think of a vertical, because the iron condor is basically two verticals. So a short leg, when you're in a vertical situation, you're buying and you're selling your short leg and you're buying a longer leg as insurance. So the short leg would be the one that you're selling is going to be 1 MMM around the at the money strike. So for instance, right now, if we look at SPY is $1 plus or minus $1.85 MMM. So we will be looking at selling a spread, a credit spread around the at the money price, $1, like within $1 of that at the money strike, right? And then your second leg being 2 MMMs. So it's just, you gotta, that I don't know, I researched it. I'll have to play it in sim to give you guys that, like, see how that could like help you stay within range as far as your verticals go. Because the thing about this, using this is helpful because, and I did use MMM a lot when I was selling verticals, is because it helps you give yourself a buffer. Because at the end of the day, you don't want your strikes breached in a vertical situation, right? So if you know what the MMM is, you can apply that MMM to help give you additional wiggle room on your vertical strikes, right? So you can make sure you're like either out the way or whatever. So it depends on how you look at it. They're saying like at the money, I know we go like a little further out there with our iron condor strategy, what we were taught, but I can definitely see how applying it in general can help you be successful with verticals. But right now we're not in vertical market environment, not credit spread at least. The third option, your long option play. So this probably may apply to you, Kim, because you're like to swing. So pre-earnings applied volatility tends to be elevated, which is why the MMM shows up, and means that options can be relatively expensive, but you can search for strikes outside of the MMM range to find a bargain and then hold that position for your long-term move and save yourself some capital.
Okay.
All right, so this is again here, if you have to reference it, just put in MMM in the search, you find the article. Because with all this thinkorswim stuff, common thinkorswims.
Okay.
And I could do more research on it to figure out like expiration, how it is applied, how the volatility is actually applied within the MMM.
Okay.
Anything else? Anything you want to build off that? Anybody else? Yeah.
Mm-mm.
You've been profitable this weekend?
I'm gonna go over that this weekend.
Did someone, I'm back to, did someone,
Oh, T
I
does
thought
strangle. I had a
someone said
feeling.
they-
I knew T was the one doing strangles. I knew it was you, T.
yeah. Was it Tanza who also was saying that she learned how to add to a winning position?
Probably. She over there was like, I would love to see her monitor screen. Like, Tanza, please send me a screenshot. If you want to like race out some like, totals, I get that. But I just want to see everything you're looking at, like from debit spread to futures to single leg options. Like, I gotta see this for myself.
Tanza, when you saying yes to you figured out how to add to a winning trade?
Yes.
Oh,
hey, good morning.
hey.
It's still morning for me, but yes. So in terms of when I'm in a winning trade, how to add to it?
Yes.
Basically, I just kind of pile in, but remember my usual entry is the gap. So that's usually my guide. It's the magnet, like Randy was just saying, but also the actual gap. So if I'm trading the gap, so for instance, this morning, instead of going long, I actually went short. So I saw that we had gapped up at the open. And then like before the market opened though, so I was in my futures contracts, in the futures options contracts.
Mhm.
So we gapped up like, you know, around 6 o'clock this morning, or 5 something this morning. And I saw that we were going to have an opening gap. So I went ahead and entered at let me see, 44.80. And then when we went up a little bit more, I got another contract at 44.85. And then we ended up, so that was my addition to adding on to a winning. Like in my mind, I was like, it's going to be winning because I want to close the slower gap.
So you're just going and buying another contract.
Yes, that's all I'm
Yeah.
doing. And the reason I bought it is because we dipped down a little bit. So I bought the 80 and then we went down to 75. But then when we went back up and we went past where I originally bought my strike, I added another one at 85 because I knew that at some point we'd have to close the gap. Now, I didn't know it would be that quick, and my expiration was next Thursday. So on a futures options contract.
Super quick. That's why I didn't play it. It was too quick.
Yes, but I wasn't in long. Because I wasn't in long, I was like, I'm going to have to play the opposite, you know, the opposite play, since there were 2 plays this morning, either holding and getting out at the long. But I did the opposite because I missed the long. And so that's how I add. So I tend to add to those positions that I feel are going to be
kind of like what Randy was doing yesterday, and she kept adding to
absolutely
her contract,
absolutely. She saw that she was, you know, that whatever move it was making, whatever move she wanted it to make, she saw that it was making it, so she just continuously added on to her winning positions. And I will do the same if I see that we're having a rush down towards the next gap, the next gap or up.
When you add to those winning, so Randy, when you're adding those extra, so on your, when you go to your trade screen, is it each individual thing, or does it just loop it into, if it's the same strike, it adds it?
So if it's not the same strike, you're obviously going to have another line. So you're going to be able to differentiate.
Right. Okay.
If it is the same strike and same expiration date, it is going to loop it in there.
Got it. Okay.
And so you're going to have to, and I didn't do that yesterday though. So this is, I think, where, you remember one time when Maria was talking about like how Chris Calvin was like scaling into different positions at different, not just different strikes, but even different expiration dates. Like that's what because I was in a June 16th. And when I went in to buy more, I did June 23rd. And then I would have just kept buying more further out with further expiration dates out and scale up my position in that way.
Okay.
To keep holding. You get what I'm saying? Like if I think it's gonna like keep going up, I'm just gonna keep buying in later as my other ones are going and close one as date, right? Because like I'm closing out like the June 16th first, right? Because I can still hold June 23rd. So those
kind of like what Fatima was doing. Like Fatima, when she was in that spot, she's like, I'm gonna get all these ones that's tomorrow and I'll hold the ones for next week. So got it. Okay.
And that's if you do the same strike but a different date, it's easier to manage those. If you do the same date, same strike, then yes, you're gonna have to like remember how many, you're gonna look at your number, how many quantity you have, and then just kind of sell. And it's just gonna be, I don't know how you're gonna manage it.
I agree. It gets complicated when you have both, when you have the same strike. What did I say? Yeah, same strike. What was I gonna say?
You just
same
go
strike,
in for the exact same position. Like
especially if you bought it. Yes, especially if you bought at 2 different prices. Then you have like if you bought at 26 and 27. So if you bought one at 26 and one at 27, you have to go in and manually get out of the one that you paid, more
and there's
for.
No way of really seeing that, to be honest.
Yes.
Because it will lump it into one and your P&L
doesn't
look right. So there's no way to really know which one you did. So it is best if you're going to like double down Maria style type of way of putting it, then pick a different expiration date. So, do your first move, your instinct, you did something closer, that was going to expire sooner. And then, it's doing the move. Okay, now come out a little bit further and maybe pick the next day. And then come out a little bit further as time goes on. So theta won't eat you, especially if it's moving slow. And that also goes if you're going to play tickers that don't move fast. Like for the Amazon, Apple people that like slow stuff, like it's best to do it that way too. So.
Yes. And remember the other day when I was saying, Randy, about how I would layer in with the MES contracts or the $5 contracts.
Mhm.
So it's the same concept. So this morning when we went up to like whatever, like 44.91,
Mhm.
I would layer in by one MES contract if I'm thinking that eventually we'll go down before the September contract ends. And I'm okay with holding because it's about $1,100 of margin that you have to hold for every MES contract.
Okay.
So what I would do is get a 44.91, so the top of where we hit this morning or somewhere up in there. And then if I'm thinking that I want to layer into a position because I think I want to go short, because I think within the next, month or a couple of weeks, we're going to have like this downshift in the market, then I buy a 44.91, then I get a 44.85, then I get a 44.75 or more, depending on how many contracts that I want. And then if we have a nice flush of 50 points, I'm holding, but I'm only holding those in my mind for about 2 weeks. But really the expiration is not until September. So that's another way to layer in. However, you are having to hold, if you want to hold, it's $1,100 per contract of margin.
Mhm.
So although you're not spending that amount, you're holding that amount until it makes its move.
Right.
But you're not having to worry about theta either. And that's another way that I layer in.
Yeah, because that's the beauty of futures. No theta,
Mhm.
no EDT. Like,
Mhm. Mhm.
and I can get out, like you said the other day, at 3 a.m. Oh, shit, let me get out my trade.
Right. And so that's a little different, right? And so that's a little different from the futures options contract where I do have theta, but in this way, it's less risky, but it is holding. It's
Mhm.
kind of holding my money hostage until it makes its move. So that's another way, Tandra, when you start to look at futures a little bit more.
No, I like it. I like it because, like I said, a lot of times it's like I want to keep adding. I want to add to it and just
That's
try
right.
to see how to manage it because
Sorry, y'all.
we got to
I've
get
been waiting on this Forex move for freaking ever, and it finally failed. Sorry. That was a hell of a swing trade. And the only reason why I held it is because this level did not break. And I was like, you know what? You gonna come for this since same patterns apply just on the Forex house. But it just failed, y'all. When I say just failed, I entered this. When did I get in this position for Forex? It literally I sat through this whole freaking W. I got in over here. This is Friday, May 26th. I've been holding this for some days. Yep. Sounds about right. I think I did do this.
Wait for to do that move. Wow. Good.
And I waited for this whole, and it just did not, like it came in here, but I would check it every once in a while. And I was like, you didn't come all the way down because this was the overall move and you finally did it. So now can you come up here and break the top and take out this? Look at this bacon candle here. Come on, Forex. I gotta check and see what the Japanese are doing for it to do that though. Oh, hell yeah, that's a great one. Okay. That was painful. I ain't gonna lie, y'all. That was a painful pep move. Painful pips. Oh man. So my goal, for those of you who didn't know that I was trading Forex, my goal is to trade everything that has candlesticks.
I love it.
Like, I plan to make my money from everything. A little bit over here, a little bit over there. Because what I realize is they all have different conditions based off of what us humans are doing in the world. So it's like, well, if the stocks are messed up right now, then I'm gonna come over here and play Forex. And while the Forex is figuring out some stuff because some stuff is going on in China, then I'm gonna come back over here and play like I haven't gotten the bonds yet, but you get what I'm saying? So like the markets have different environments within themselves. Like cause one may be good while the other one's bad and da 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 da. So Forex is not margin. Forex is its own little account. So when you open up your TD Ameritrade, I can show you in Sim because it shows the same way. But when you log into your TD Ameritrade account on within TD Ameritrade online, log in, go to client services, and your profile and everything, where we do all our applications, Gene, because I know you know where we're at. You're going to enable Forex trading, okay? And then when you enable Forex trading, then a Forex account is going to be created within your account if you signed up your account to do Forex at the beginning. And so up here in the top left, you see Forex buying power. In TD Ameritrade, you're going to do an internal transfer. Once Forex is enabled, the internal transfer will allow a transfer to the Forex account. So you're going to have to fund the Forex account and then trade Forex. All right. So you're just going to have to just move some money from your margin into the little it's like a little Forex pool off to the side. And it pulls from that pool only. And so it's separate. So futures affects your margin. Okay. The money, it pulls from the money that you have, your full buying power in there. That's the futures. Forex, you have to move money in the side pool and then trade it. All right. But you need at least, I would say, a couple $100. You don't need as much money to play Forex, no. So you just don't. The leverage is more. That USD JPY trade, playing the micro, not the minis, is about $400 or so. So that looks like the SPY alert went off at the bottom. So that means I need to get out. This is down $200, which is my risk tolerance as well. So this alert came, this stop loss came in right around my risk tolerance. So
gave up the ghost.
I'm
Where did it hit? Oh, I see it hit it. Yeah.
I'm getting out, following my trading plan. I'm taking my $200 loss, and I'm being okay with that. And if it turns back around, it turns back around. But I don't know what it's gonna do. I'm waiting on it to go all the way up here. It's all the way down here. I'm safe. I'm out regardless. So now what I'm waiting on the breakdown. And then if we can continue past this order block, then we do have a scalp move down here. So I don't know, Tans, are you still holding bearish to come down here? The next,
I have so many puts in my account, including I bought some MES contracts that expire the September contracts, the regular way. I bought some of those too this morning because I'm just I'm holding for a while. I have expirations of next week, and then I have the regular continuous contracts expiring September. Okay. So I got out of the calls because, I already told you I missed the call. I missed the move on the ES call this morning.
Yeah.
And then I got out of the Adobe call spreads, and then I put a little statement in the chat as well about Adobe call spreads. I don't know, guys, I'm kind of Adobe is my nemesis a little bit because my husband actually works for Adobe.
Oh,
yeah.
Well, tell him I made the most money I've made in the stock market has been off Adobe. So tell him thank you.
You know what? I tell all of you thank you because I think because he works for Adobe, then I tend to lose. I think it was just happenstance that I got money from Adobe yesterday on those spreads. But yeah, I can see Adobe out of my window as well. So I live in downtown San Jose. So
wow.
Yeah. So anyway, but if anybody wants to try that with Adobe, those are some spread options. They cost $325 or less. The lower Adobe goes, the less the spreads are. So, probably sometime today they'll be $295, and you have 2 weeks to, 2 weeks to give it a try, or next week and get out. But, you can try it in Sim just to see how you like it. But Adobe, of course, may fall the other direction.
Right. I need some homework on the debit spreads because I know you talked about them, but it's still not ringing in my brain just yet. So I'll look at this.
Yeah, it does take a while to click, but it is definitely a surefire way to get in on any trade when the premiums are extremely, high. It's just one other way. Now of course your profit is maxed out, so you're not going to make, just an unlimited amount, but it does allow you to get in for cheap and then make
Right.
a significant profit in a short period of time. So it's really good to play with earnings, and that's where I do those strangles as well. And I'll do a strangle with the debit spread.
Mm.
You
A
just
quick
do it.
question. And are you in the bid column, I guess? I'm just thinking it's opposite of the call credit or put credit spreads, the vertical
Absolutely.
where we're selling.
Exactly. It's the complete opposite. So where you'd be receiving credit. So with me, I use E-Trade, and it actually lets me know whether I'm getting into a debit spread or a credit spread. By when I get into the actual option, it lets me know how much I'm either receiving or paying. So of course, if I'm receiving, I'm in a credit spread. And if I'm paying, I'm in a debit spread. So it's just
Okay,
the
thanks.
opposite. You flip the numbers.
Love it, love it, love it, love it.
I think what we
I
just
think I'll
saw.
make money on Adobe today. If Adobe come down, to hell with the ETFs today.
Yeah, but I think what we just saw in ES was I guess a baby silver bullet, a baby one, kind of sort of looks
Leave
like
it
that
to
was
Tandra to come up with nicknames on top of the nickname. Leave it to you, Tandra.
a T9 silver bullet. It was T9.
Again, you will get your credit due on the Trader's Credit Dictionary.
Yeah, if you have a
all
country,
because of you.
If you come from the country, you got all the words.
That's true. That's true.
It is true because my husband is also from Florida. So
so he's country.
Yeah. I'm like,
that's some interesting things. Right?
I'm originally from I'm originally from Texas,
okay.
But my husband, he's from Florida, and he's from Gainesville, Florida. So
we have a whole new language. We can talk.
Definitely. So, and it has not left him. We've lived all over the world, and that little twang my husband has, and his whole way of doing things, just because he is literally from the country, it has never gone away. But that's okay. I love him for it. So it's all right.
My husband is worse than me. He is so funny when he starts saying, I just laugh. I'm like, you cannot take the country out of you. The country will not disappear.
No, it won't. It's there. It's here for life, and that's okay because I'm here for it. That's all right.
Yeah.
So
I code switch like crazy. I know how to code switch pretty good because of being in education and some professional background.
That's right. That's right.
But he does not. My husband does not code switch at all. He just said he said how his grandma and them tell him. He said like his grandma and them.
That's right. That's right.
So funny. So funny.
Yes, very. But I understand.
So after this T9 silver bullet, let's see what it's going to do. Let's see if it's going to stay down.
Yeah, that's because this. Okay, I'm tell y'all right now. From the 30-minute, y'all know me. I go back and forth between cancel. From the 2-hour, it's looking kind of emish. Okay. From the 30-minute, I don't know what the fuck's going on. Like, I want to draw to
it's this one.
Yeah, this is no. And then the 15-minute is not. This cradle though is definitely holding its line. Like this whole line is holding up. So we're again just waiting on if it's going to break down. I kind of want to get into maybe some puts and try to reverse myself here, but I don't think it's worth it looking at the futures. I really do think my better trade today, looking at the futures, just leave the SPX, the ET, unless you took the SPX scalp down, the impulse move this morning down. That's all you had as far as ETFs, I think, because it's been a trifling troll since.
Right.
So now
can I point out what I'm seeing right now? So do you see those tweezer tops right there? They are stepping down. You see them? That's the other part that makes me think that this may be going down because it's making lower lows, you know.
Yeah, well, these was making higher lows, but the lower is not like it still needs to break the lowest low.
Right, it hasn't broke those.
And so that part is making me like, okay, you're coming down. but are you like squeezing more than you're trying to actually like break? Because this level's holding up. So you'll just kind of continue to squeeze into this area, like trickle down, but maybe not break. I'm not sure yet. It's just there's no move, okay? When there's no move on a 15-minute, there's no move. All right. Not anything that has a good risk to reward. Let's see, this 15-minute has a good risk to reward. And Adobe looks way better. And Adobe looks like it's doing a continuation bear move. So it did the first one. I missed the first one. That's fine because I was getting out of my other trade. Plus, I was educating this morning. Educating and trading is tough. But it looks like it may want to do a breakdown. So set my alert. And if I can get it to break down past this wick a bit, I think I'm going to go ahead and jump in on a 30-minute. It looks like this is the complete fair value gap. And I'm going to buy a 495 put and ride Adobe down because I don't mind Adobe at this price now. That part is that terrible inflation is gone.
Well, watch Adobe because, like I say, it can start moving. It'll switch out on you real fast. So
yeah, I think it will be like quick. So hopefully I don't miss it. Like because I'm not in it and I'm trying to see if it's preparing for it. Because that's one thing about Adobe. Like you really gotta kind of get in it like right before it happens, or you're screwed. I'm taking it. Let's see if I can move this down.
You're right. You gotta already be in it. Just before already be in it. If you can get it the night before, that's even better.
So I'm gonna see how it tests up this fair value gap here. And I don't even know if it wants the whole thing. Adobe can do that. Like she's saying, it can switch up to where like any of this, it may just bounce off of it.
And I just added another option as well. If anyone wanted to try a put debit spread on Adobe, I put the strikes in there with the price.
Because the
premium, I just looked it up.
So Tanza, where do you switch this at? Is it vertical? Where do you go on this?
Okay, so now I use E-Trade, but what you do is you buy to. You want me to tell you exactly? So you would buy open the June 30th 495 put, and then you'd sell open the June 30th 485 put.
Wait, June 30th. Hang on. June 30th.
Mm-hmm. And it's going to be the 495 put. So you're going to buy to open that one.
495. Okay. So that's your ask.
That's your, yeah.
Buy it is an ask, right?
Well, I don't know about. Well, you know what? If you buy open the June 30th 495 and then sell to open the 485, on my screen it doesn't tell me about the bid and the ask. Mine simply lets me know that it's going to be a debit spread. But I know that no matter what platform you're using, you're just going to buy to open the 495 and then sell to open the shorter leg for any debit spread. So no matter what the platform is, so that you're not having to look at the bid and the ask, you just want to make sure that you're buying your long leg and selling your short leg.
Okay.
So it's going to be the, so if you set it up like that, then you'll be able to see the cost of it. So right now it's $3.50. And that would mean that you anticipate Adobe going down and through, or at least towards 485 by or before June 30th. And so that would be another way if you don't want to spend the money on a put at, I'm sure it's probably close, if it's June 30th, it's probably close to $2,000 or so. But this is a way to get in for $350, but you can only make $650 max. But you have 2 weeks to kind of see what the move will be. Were you able to put it in or see it?
I am looking now. Hang on. So I did the buy side and it let me add.
Yeah, then you would
add. The buy was
495.
The sell was 490.
485.
The sell was 485. Okay.
And that's just me. I tend to do 10-point spreads, but you can do 5-point spreads as well. But you're not gonna, of course, you're gonna make half the max profit if you do, but then you also, it will cost you less. So the other option is to buy 2 5-point spreads if you want to do that. But I tend to just do 10-point spreads just because that's what I've been doing. Are you seeing it, Randy, too?
I was looking at a potentially different move for it. I'm gonna come in and do that one too. Hold on. I guess I'll just.
And I
yeah,
put
because
the
I'm doing
Edward
it in
for
my
the
sim.
call.
So I got the. Oh, I think I did.
Wait, what
Yeah,
expiration are you using again?
Now I just said June 30th, but you could also use June 22nd. I mean, I'm sorry, 23rd.
Okay.
Yeah, I'm on June 30th.
And then that should, and then of course, as Adobe.
Oh, the cost is $356. Okay, I think I must have done it.
Okay, yes. So then 356. So like if you didn't want to pay, so my number that I will not go beyond is 380. So I won't pay more than $380. So, but let's say you said I only want to pay 350. I never want to pay more than 350. You can just put your order there, and then as Adobe moves around, it'll get you in.
Got it. Okay.
And so the other strikes that I gave earlier for the call side, if you were to put that order in, that would be a strangle using debit spreads.
But you want to be in the
do the call. Oh, I see what you're saying. Yeah. Oh, so what we would probably consider an iron condor.
No, because
it's directly across from it is what you're saying.
Yes. So the difference is the iron condor is going to be a credit spread on each side.
Yeah.
But the strangle with these debit spreads is a strangle using debit spreads. So you're getting a call and a put slightly out of the money or out of the money with the same expiration date. Because a strangle can be either the same expiration date or it's usually the same expiration date, different strikes. Like, and they're usually out of the money, whereas a straddle is at the money. One at the money call, one at the money put. But a strangle is same expiration, out of the money strikes on either side. I know you're like all these words are really It's really all this is if you get that call spread on the other side, like the 500 510 or whatever I put in there earlier, that would then be considered, and you had both of those in play, that would be your straddle. I mean, I'm sorry, I didn't mean to say straddle, I meant to say strangle, but using debit spreads instead of a regular straight put or straight call.
Okay.
Does that you're like, okay. You're like, I don't know what you're talking about.
Yeah, I don't know what I'm doing, child. So on Thinkorswim, it still calls it a vertical.
Yes.
Yeah, you're just buying instead of selling. That's the difference.
Oh, got it.
And Randy, do you get what I'm saying about the strangle? Like, although you're using you're buying a strangle, but instead of buying a straight call or a straight put for the strangle, you're using a cheaper debit spread on either side.
So I think I'm getting it. Like because so we should be buying because it will still be following the same rules. If we want price to go down, we should be buying this put side debit. Okay. But you change your spreads to 10 points, but you could do 5 points.
And it's just what I do because I'm wanting a little bit more of a profit.
Right.
So I'm also, causing myself to pay more because a 5-point spread is, like $1.50, $1.80.
Yeah, I see that.
And that's the way to go. Certainly if you're just trying it out, because then you're like, well, you know what? I can still make a max of $500.
Yeah, I'm gonna see now. I'm just gonna kind of buy in right here and see what it does. I know I saw that wick, so I heard the alert go off, but I didn't get in my live because I noticed this wick dipping.
Yeah, that was good. Yep. Double bottom.
And I know how these wicks like to do you, and they'll run up more than you think and then come back down. So, and again, today, it did most of its volatile drop this morning with the rest of the market. And so that would be the ideal time. I was getting out of it overnight. I'm not really tripping. You can't get everything that this market throws at us. Like, I'm sure there's probably some even better move out there somewhere. We don't follow everything. But I'm gonna try. If it comes back down, I'm gonna head and just Try. So where do you close it? How do you close these?
So then I just close it out at, okay, so now what I normally do is decide what do I want? 30%, 50%? Do I want full profit? So what I usually do is if I paid $380 or so $3.80, my first area where I want to take profit is $6. So that's only a little bit, but for me, I think that ends up being, what is that, about 40%? I
Okay.
don't know. My math brain isn't mathing right now, but around $6. Like, for me, $6 is a good move. So I'm like, okay, a couple of $100 or almost, what is it? Well, anyway, 380. Well, do the math, okay? I can't even think right now. So, but then if it's really making a move, like a 20-point jump, then I'll put in $8. So it's really how much profit you want to take, because you do have to hold a little bit for max profit.
Right.
If you're
Okay.
remember, it's the time and the date factor. So that's what happens with debit spreads. Your time and the price have to correlate at the same time. So like a good op time to do it is like, if you really think the stock or whatever it is going to move and make its move within the week, then just get a week out, because on equities, for instance. But if you think Adobe will take longer to go up or down, then get 2 weeks out. But if it makes a stupendous move, you're still going to probably get max profit. But my first one, if I spend $380, is $6. Then I do 7, then I do 8. And then, of course, if it just goes parabolic, then I'll get max profit anyway. But I don't want to put in max profit like $10, and then it takes me forever to get that profit.
Right. Right.
So with the debit spread, you want price to come down into your legs.
Yes, absolutely. And
so you wanted to touch it. Okay.
That's right. You actually wanted to.
It's not like the ones that, it was not like the verticals that we were doing, because we don't want it to come anywhere near.
Yes. This is the complete opposite. So you actually want your entire spread.
So you don't have to jump ship.
No, you actually, the closer it starts to get to your price, then you start to be in profit. And sometimes, depending on volatility, it will get close in price to that first strike that you have, and you'll still start to see profit even if it hasn't started to breach those 2 strikes.
Got it.
Now, are you on the bid or the ask side of the aisle when you're doing
Ask?
Because
the difference between let's clear this up. Let me make it verbatim clear, because I think I can.
Yeah, because I'm trying to follow
question
too.
And the basic question, like, I feel like some of y'all shouldn't be asking this basic question. Okay, the difference between a debit spread and a credit spread is buying and selling. The credit spread, you are selling it, the vertical. In the debit spread, you're buying the vertical. They're both verticals. The difference is buying one, debit spread, selling one, credit spread.
Yes.
Y'all got it?
So putting it in computer, do you buy you buy to open first?
Buy to open the higher price leg.
Okay.
So the higher number is going to be the buy leg, and the lower number will be the sell leg. So you'll buy to open the larger number, and then you will sell to open the smaller number.
But I'm not doing it at the same time. I'm doing it separately, right? For the same.
Yes, you're doing it you can do it separately, and it depends on your platform. So for me, I do it at the same time because my platform puts my vertical together in, like when I press call vertical or put vertical, it actually sort of formulates it for me, and I don't have to put it together. So it depends on your platform.
Okay,
do you use Thinkorswim? Like,
yes.
Okay, so Randy and Tandra or whoever else has Thinkorswim, are you guys able to tell her how to put it into Thinkorswim? Because my platform is completely different than Thinkorswim.
I'm sorry, you want to do it? Did you do it? I did it already. What I
Oh.
did is if you go to vertical, you could probably do it there as well. But what I did is, Randy's pulling hers up.
All right. so
You
what
can probably do
need
it,
to
and you just have to make these strikes are 5 points apart though.
Yeah, I
How
did
you-
5. I stuck with the 5 for now because I'm just trying
Oh,
to
okay.
get
Go
a
ahead and
vibe
show
from
'em,
buying it. So you're gonna be under vertical. I'm
Oh.
doing next week's expiration date. All right. We're on the put side because price is coming down. So we're treating it the psychology on debit spreads. So you're treating it just like single leg options. You want to buy in the direction that price is going. So you're buying here the 495, 490 because we think it's gonna probably go there. So when you click the buy in the ask column, the buy button for that, it should populate both legs of the order default, just like it's doing for Tanza.
Yes.
There are some situations that it may not be doing that, and that may be a settings thing that you may have changed inadvertently, but the default settings usually pull it like this for you. And then you would just simply click and buy this order. You don't have to do anything else from there. The overall concept is you want the strike prices that you're choosing to be breached instead of not being breached. So if we were in a credit spread situation, we would be selling this side. We'll be selling the call side because we're expecting price to drop in this instance with Adobe. So we would be selling a call for price going down if we were doing a credit spread. And so we would click in this bid column, sell, and it would change this order to red. And what we'll be looking for here is for price to stay away from 510, not to come back up to 510, 515, so we can make $1.40 when this expires next week on June 23rd. Because you gotta remember, the selling is expiring. You want to collect the premium that you're selling for. But in the debit spread, and I'm gonna let you come in here and say this, right? For the debit spread, your profit is coming from where? Because that's the part where I'm still like trying to understand how we're getting the profit in the debit spread situation.
As price is coming at you, right? Yeah.
Right, as price coming at me, because that's the part that I'm struggling to.
It's going in the money. It's starting to
I
go
can
Yes,
see it,
that's
but I'm
basically
struggling
what's
with.
happening. That's exactly what you just said. As the price goes in the money. So think of the debit spread as you're buying it out of the money. Yes. And you're buying it out of the money. And as it gets closer to your out of the money strike, you're getting into profit, just like you would with any other out of the money put or call.
I like it,
but my Adobe, mine has NA buy. It doesn't have prices.
Are you trying to do this NA buy? Are you in your live account?
No, the sim. Let me see if I.
And you're on Thinkorswim?
I'm on Thinkorswim because at first I had June 30th and I went back. I saw you had the 23rd, so I went back to the 23rd.
So, and when you click the 490, 495 strike, or you click the ask price under there, what happens under the order?
Oh, okay, I see it. It doesn't have numbers for me to see in the what you call the chain, but it does down here. So, okay. So I still can click on it.
Okay.
Okay,
And so,
vertical.
Are you on your phone by chance?
No, computer.
Okay. So it should look similar to, so where are you seeing the NA at? If we're here and we click
right there, it got NA up there.
In your ask column?
Yeah.
And you're on June 23rd.
I'm on June 23rd, 7 days, weeklies. It got vertical 490, 495. I clicked on the ask. It's allowing me to do it, but it don't have any numbers up there.
You don't have any numbers in your whole option chain? Is it just taking a while to load?
No, for that particular one, I don't, but for the June 30th, I do.
Do you have any numbers on the June 23rd option chain?
Hmm.
Do you have any
They
value?
are they are scattered. It must be a glitch
I
or
think,
something going
yeah,
on.
because I'm like that. I think that's a loading issue.
I want to say, but I said mine was doing that yesterday because I was I was having internet electricity problems, and so my hotspot could only manage so much of it. So my options chain would not fill in, which is why I missed my Home Depot trade yesterday. But anyway,
But
so
it
yeah,
does have it got the 183 for price. So I'm gonna go on and click it.
I mean, you and Sam, I'm
Yeah.
all for clicking it.
Yeah,
click.
I'm gonna see him. Yes, yes. So I'm buying one, selling one, 495, 490. Okay, I'm gonna confirm.
Mhm.
Simulation, yep.
And we'll
So
see
I
how
can
this
do
plays
what
out.
y'all
Now,
doing.
you're still waiting
Yes.
for Adobe to really break. Adobe's not breaking this line. That's why I moved it. On the 5-minute, I had this line set here to 501.32, which was underneath this pin. I moved it to the wick of the pin because I had a feeling the wick was going to hold it up, and that's exactly what it's doing. So, and when you come to the 3-minute, you can see that wick is no longer a wick. It is a borderline double bottom, tweezer bottom, I mean, pattern here. So that's why it's holding price up. And we needed to I need a reversal up here to know that it wants to break down. I did enter them in sim. I did not do anything live for this because of this wick, and it's playing games, and price in general it just hasn't been moving all day. Look at this watch list, looks awful. Look at this. Oh my God. I would rather be all red than to be Christmas tree. Okay. I don't like this. I rather one color or the other. Don't give me both. Okay. Look at this futures on the 15-minute, awful, just disgusting. We're not trading this. So if you didn't catch this morning's move or the overnight move, sorry. I don't think we're gonna get a good afternoon one either. Unfortunately, usually they could be a setup for an afternoon one. I don't see that today. The only potential afternoon one I got is Adobe to come down. And if Adobe doesn't want to do that because it's getting confluence from the rest of the market, then it's not gonna do it. Plus, it ran down quite a bit this morning because it was up like what, $20. So it ran down half. This is a pretty big candle. So I wouldn't be surprised if Adobe doesn't want to like finish this gap out further today. I just wouldn't. It is noon. I appreciate all of you guys for hanging out longer today. I definitely shout out to Tanza for that explanation on debit spreads,
Yes.
us
Thank
for
you. Yeah.
leading us into one as a group.
Yeah.
For as many people who took it,
Yes.
me and Tandra took one, and a few others, and I appreciate that because I've been saying I'm gonna do it. So we finally clicked the buttons to see this